The biologics is the next leg of growth for this company, and of course the food division will also lead to the growth. So overall, a thumbs up coming for Vimta Lab, and hence we are seeing the stock buzzing in trade. But with that, guys, it's a wrap on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with the
Hello, welcome. You're watching Ask Profit here at NDTV Profit. This is the afternoon edition. I'm Mahima Vacharajan, and with me, as always, is going to be joined by Puneet Zaveri. This is, of course, a show where we get all your stock-related queries answered. But before we start doing that, let's take a quick look as to how the markets are doing. The Nifty 50 right now is trading just about 0.14% higher. It did see a peak, but it's come off from its day's high point, trading around the 24,300 levels. Just a 34-point, range-bound trade is what we are seeing on the benchmark right now. Let's try to pull up the heat map as well and see as to what's happening over there. What are the counters that are buzzing? What are the counters that are under pressure? You have Coal India, HUL, Titan, TCS, etc. That are under pressure down in that range of 1 to 2%. Titan just ahead of its numbers. But you have counters like HDFC Life that continues to do well, up 3% now. Bajaj Auto also doing fairly well, up 2.8%. M&M, Grasim, Shriram Finance are some of the names. NTPC as well is doing fairly well. So that's with regards to where the Nifty 50 goes. The Bank Nifty also, let's try to pull that up because that is also, sort of a range-bound trade, just about 127 odd points, up by about 0.2 odd percent. 56,100 is the level at which the Bank Nifty is trading right now. Let's pull up the sectoral heat map to see as to what sectors are indicating right now in terms of trade. You have your Nifty Defense, which is clearly leading that pack. In terms of the gains, it's up by about 2.4 odd percent. For my Nifty Auto, which did see some profit booking in the last couple of sessions, now it's up 2%. The energy is also doing fairly well, up 0.7%. But on the flip side, FMCG is the one which is taking a knock today, down 0.6%. So that's with regards to where the sectors go. And the BSE 500 lastly, before we start taking all your stock-related questions as to what are the counters. Very specific counters on the back of news flow and earnings buzzing. Godrej Industries, of course, being an exception, up now 20%, followed by something like an embassy developer, which is locked in upper circuit. Tejas, Rosary Biotech, Piramal Pharma doing fairly well. On the flip side, Godrej Consumer on the back of, weak commentary from the management is down 5%. Brigade is where collections is a problem, which is why it's seeing a downtick of around 4% on the back of numbers. KPIT also on the back of numbers, down by about 4 odd percent. So that's with regards to where the markets go. But let's start taking all your stock related queries, and to answer them, we are today joined by Jatin Gedia, VP Technical Research at Teji Mandi, and G. Choklingam, founder and MD at Economics Research, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. The first question that we have is from Keshav, who's writing us from Chennai. He's asking about DLF. He says whether at the current market price is DLF a good option to buy from a 2 to 3 year perspective. Mr. Choklingam, your view?
Yeah, definitely for medium to long term, it's a great stock. A lot of correction has happened. And let us not forget the fact that in cities like Mumbai, Delhi, the land values have gone up substantially in the last 3-5 years. And DLF is one of the realty companies which holds a sizable land bank, and also through subsidiary, it has got a very good leasing business model, which is perennially a growth business, because as inflation remains in positive, the rental income will keep rising. So short term one may not make money because there is no perception-driven rally for realty stock right now. But it's a fundamentally sound stock to invest for medium to long term. That's my research view.
Okay, all right. The HDB Financial is the next one. Kavita from Bengaluru says that she's bought it at the levels of 740, 145 shares is what she's holding. Wants to know if she can expect a near-term, bounce back in the counter. Is there chances of gain is what she's asking. Jatin, your view on the charts?
Yeah, technically, the stock has reversed its downtrend. Since last couple of weeks, it was consolidating, and now it's starting the next leg of the up move, which could take the stock to 780 to 800 odd level. So continue to hold on to the stock with a 680 rupees stop loss.
Okay, all right. The next one that we have, by the way, before I take the next question, for viewers who are watching us, you can also give us a call on that number. You can call us, ask us live your stock-related questions. All right, the next one is on IRIDA. Shankar from Bengaluru is planning to buy around 1,000 odd shares. He wants to know the target price for this one. Jatin, I'll stick with you, considering that Shankar always asks short-term related questions. Though he's not mentioned the time period, but your view on the charts for IRIDA.
Yeah, see, IRIDA has been also consolidating within this 135 to 143 range after a sharp up move. So this consolidation is just a brief pause in the overall uptrend, and we expect the next leg of the up move to resume and take the stock towards 146 to 150 on the upside. So continue to hold, maintain a stop loss at 130 odd levels for this holding that he's having.
Okay, all right. The next one that we have is from Anil Bhalla, who's writing us from Jalandhar. He's a regular viewer. He's asking about CG Power. He's bought 1,000 odd shares at the levels of H26 for trading. 15 days is what he's watching for on the charts. So Jatin, I'll stick with you again for this one. This counter has seen an exceptional momentum. Do you think it's still there to stay for the next 15 days?
Yeah, see, overall, we believe that in today's trading session, it has broken out of a bullish flag pattern. So that is a trend continuation pattern. On the upside, we are expecting levels of 890 to 900 odd levels. But I would suggest to partially book profits at current levels and hold a little for levels of 880 to 900 on the upside. So partial profit booking is advised and hold some for targets of 900 on the upside. Stop loss should be placed at 840.
Okay, all right. The next one is on Reliance Industries. 50 shares bought at an average price of 1400 about 2 months ago. Again, a short-term one, Jatin. 6 months view on this particular counter?
Yeah, see, Reliance has been one of the outperforming stocks within the heavyweight pack. So I'll be expecting the up move to continue towards 1520, 1540 on the upside. And the stop loss level is placed at around 1400. So good risk reward even to hold and buy fresh at current level. So hold and fresh buy is also suggested.
Okay, Roto Pumps is the other one. Gautam Shenoy from Bengaluru has bought this counter at the levels of 100. 250 shares is what he's holding. And he wants a long-term view on this one. Mr. Choklingham, any view on Roto Pump by any chance?
I find valuation quite stretched. Maybe in case it corrects at least 5-10%, then one can consider. Otherwise, it's trading at over 36p on trailing earning, which I consider as a stretched valuation.
Okay, all right. The next one that we have is from Richie Lalu, who's writing us from Kerala. He's bought 19,000 shares of Yes Bank at the levels of 15 rupees. Wants to know if he can continue to hold, book profits. What should be the next course of action for him? So he's sitting on profits of over 1.4 lakhs right now. Jatin, your view on the charts for Yes Bank?
Yeah, see, the stock has witnessed around 13 to 14 odd % up move within this 3 to 4 trading sessions of the week. So my suggestion is that you continue to ride the up move. However, keep a trailing stop loss at 21. For any dip below 21, the stock could reverse its recent up move. So maintain a trailing stop loss at 21. On the upside, the near-term resistance is placed at 26.
Okay, all right. So that's the view on Yes Bank. The next one that we have is on CSB Bank. Manju Dhamija from Amritsar is asking whether she should continue to hold the 1,000 shares that she's bought at 401 or should she exit? Mr. Choklingham, your view on CSB Bank?
For medium to long term, one can hold. The performance has been good and the price to book value is also roughly around 1.5 times, which is quite decent to hold for minimum 1 year.
That's the view coming in on CSB Bank. But let's go across, take our next caller from Vijayawada. And Aruna has a stock query for us. Aruna, very good afternoon to you. What's your query?
Yes, sir. Good afternoon to all of you, sir. Actually, I'm having Vimta Labs, sir. It's 1,000 shares at the price of 600 average. So I bought long time back and recent results are good. So what is the short-term view and long-term view on this counter? And shall I hold or any average?
And you bought this for the long term, right, Aruna? I mean, when did you buy into the counter for the first time?
Yeah, this is what like almost 10 months back, sir. Like
10 months
almost
back.
6 to 8 months back, yeah.
Got it. Well, Mr. Choklingham, let me come back to you actually. If you track this counter, Vimta Labs, what would you recommend Aruna to do? She's holding a big position of almost 1,000 shares, bought at 600.
Yeah, so I do not know about the quality of the management, but when you look at the numbers, it gives some confidence. Last 5 years, if you look at sales growth and profit growth, is very consistently growing. Profit is growing much faster than sales. Also, for such a growth company, trailing P of 30 also looks quite good to hold. So I would give a hold recommendation for medium to long-term investments.
Okay, all right. So that's the view coming in on Vimta Labs. The next one that we have is on Poonawalla FinCorp. Rajiv from New Delhi is holding 1,000 odd shares at the levels of 458. He says he's bought this after the Q4 numbers. What's the view from a short-term perspective? Jatin, your view on the charts for Poonawalla FinCorp?
Yeah, see, for Poonawalla, we have a positive view. On the upside, we are expecting levels of 500 to 510 from a short-term perspective. So that is around 10 odd percent up move we are expecting. The trend is positive, and the stop loss one should maintain is at 438. So continue to hold for 500 rupee target.
Well, the next question is from Pillai from Kerala. He's holding on to 20,000 shares of Vodafone Idea, and we know it's a retail favorite stock by now. He's been holding it at 11.14. Now, he wants to know if it's a better time to sell it now, Mr. Chokalingam. We actually, the stock has been buzzing over the last 3 days that Mr. Kumar Mangalam Billa has been appointed as the chairman, but that doesn't change too much in the financials. How do you view the stock now? We've also seen that deferred AGR payments of the first 4 years will get some reprieve. Would you recommend Pillai to hold on or sell out?
See, I'm not trying to escape. It's a fact of our life that it's very difficult to give concrete answer. It depends on the investor's profile. Why I am saying, particularly for this company, fundamentally, it's a clear sell. There is no way to justify, when you have so much of debt, which is more than the sales, and making continuously losses and losing market share. So you don't find, very valid fundamental reasons to hold or buy. But then there is a chance of going wrong. Because today you have only 3 major players. So it is very difficult to imagine the third player exiting the industry. So by any chance, the government, the lenders or the promoters make a big sacrifice to bail out this company, then this stock can give phenomenal return. So as an analyst, for me, very difficult to predict whether such sacrifice will happen. If it happens, how soon or what is the quantum? A lot of uncertainty. So risk-taking investors who like this kind of tactical ideas can hold. Otherwise, extremely conservative investors, it's quite risky to hold.
Well, just the way, Mr. Chokalingam, you highlighted that the debt of the company is higher than the sales. I think this got us chuckling here in the studios, but you make a very pertinent point at this point of time for Vodafone Idea nonetheless.
Yeah.
But let's go across, take another caller from Guntur, and Man Singh is actually giving us a call. Man Singh, very good afternoon to you. Welcome to the show. What's your query?
Good afternoon, sir. I'm holding Inox India, 120 shares, average price 1320.
Okay.
Should I continue to stay in this stock, or should I shift it to Nesco or Bombay Burma Trading? I want to view from Chokalingam, sir.
Got it. Well, Mr. Chokalingam, he's the other 2 options he's given. I know you like both of them, Nesco as well as Bombay Burma. You've talked to us about the channel. But on Inox India, what would you recommend? He's sitting in decent gains, bought at 1320. Stock trades at 1557.
It's a good stock. Valuation is stretched, but if you look at the growth, the business model, it gives a lot of confidence. It's a good stock to hold. There is no doubt about it.
Okay, all right. So that's the view coming in on Inox India. The next one that we have is on BSC. Our viewer, Garanath from Hyderabad, wants to know if this is the right time to enter from a long-term perspective. Mr. Chokalingam, would you recommend that?
I would skip giving my view. I don't have heart to give buy call at this rate.
Okay. All right. I'll take a technical view also on this one. Jatin, your view on the charts for BSC.
Yeah, so rightly said by sir that currently the stock is a little overstretched, and if I look at current week's gain, it is around 8 to 9 odd percent. Technically, the trend is positive. So if someone is holding, he can continue to hold with a trailing stop loss at 300 and 3,800. But for fresh entry, I would suggest to wait for a dip towards 3,800, 3,750, where we have the short-term support kicking in. So current levels avoid, but buy on dip, yes, overall trend is positive.
Got that view, but let's go across, take another question now. And this one, it's yet again, actually it's quite open-ended. So let me take another one from Jay Krishnan from Kerala. Now, he's asking his question on HCL Tech for a 9th-month view is what his question is. And what would you recommend here as well? He's bought it at 1,710 for 9 months is what the question is. So What would you recommend here, Jatin, at this point of time of this thing? Do you venture into this, or shall we average down on the charts?
Yeah, so technically the stock is weak post the announcement of the result. Even though we have a decent rally on the indices, and most of the other IT stocks have, somewhat, been trading off their highs, but this is currently trading near the lows. So definitely no strength at current levels. Only if the stock manages to crawl above 1250, 1260 on the upside, then I would expect that some kind of a bottom is in place. But current levels, avoid. If he's holding, then exit.
Okay, all right. The next one that we have is from Satyan. He's asking you, Mr. Oaklingam. His question is to suggest a few stocks from a long-term perspective. So it's an open-ended question that he's asked. But any particular counter that you are looking right now, which is looking attractive in terms of valuations to make an entry from a long-term perspective?
Yeah, apart from my old stock, which I have repeated many times on this channel, few new stock ideas I have added recent times. One is a Bharati Hexacom.
Okay.
Its valuation is slightly stretched, but I like it. It's a growth stock, telecom mobile. Then second, Techno Electric Engineering. This is another stock I like a lot, and all based on the fundamentals. And then third, Punjab National Bank. It is available at a 10% discount to adjusted book value. And net NPA is just 0.29%, which gives me tremendous confidence in the stock. So these are the three stocks I like most.
Well, very exciting list there as well. Some that are in front of you, you might have missed, but Techno Electric, one of the key stocks of 2024 rally is back on Mr. Chokalingam's radar. So is, of course, Bharati Hexacom. But to take across the next question, and caller actually from Srinagar, and Samir has a stock query for us. Samir, very good afternoon. What's your query?
Afternoon, sir. I have got Thyrocare Technology, 1500 shares.
Okay.
At the rate of 450. I need to know target and today is quarter results for this company. Kindly predict what will be positive or negative.
Well, if we could predict, Mr. Samir, we wouldn't be sitting here at this point of time. But are you holding this for a long term or a short term? Like, when did you buy into this counter?
Short to medium, sir.
Short to medium. Okay, then
I am a positional trader.
Positional trader.
That's
okay.
I'm telling you. Yeah.
Got it. Well, we had Kushbura earlier, and he told us, and he's always been telling us that he doesn't trade on the result day. So that could be one lesson. But Jatin, do you have a view on Thyrocare? What would be your opinion? And are you a trader who goes into the result day as a trading opportunity?
Yeah, see, Thyrocare is one stock which is not in the FNO space, so I won't be able to hedge my position. And if the results are not out during the market hours, I have to depend upon the next trading session. So there is a possibility of a gap over or a gap down. Since he's holding in cash, if the stock slips towards 440, then I would be a buyer. On the upside, the immediate resistance is at 508. So going into the result, I would suggest if he's having some profits, then book partial profits and wait for 440 on the downside to enter again.
Okay, we've got Sriram calling us from Chennai. Sriram, a very good afternoon to you. Go ahead, ask your question.
Hi, good afternoon. I'm calling from Chennai. I hold Castrol India at 500 average price, 200 average price, and quantity 500. And obviously, I'm making a loss at this time. I would like to know if I should hold the cost average or exit.
What's the time period that you're looking at?
Maybe 6 to 12 months.
Okay, Jatin, your view on the charts for Castrol India?
See, Castrol has been an underperformer. It is not able to surpass its 200-day moving average for a very long time, say from September last year. So underperformance is there. Also, apart from that, there are no signs of any trend reversal showing up in the stock. So I would suggest to exit this counter at this point of time when there is a bounce back. So suggestion would be to exit the holding.
Well, time now for the rapid fire round in this edition of Fast Profit. Mr. Chokalingam as well as Jatin, you know the drill. Keep your answers as short as possible. First question that's coming in between Alembic Pharma and Petronet LNG. What's a better pick for the long term, Mr. Chokalingam?
Alembic Pharma is better than Petronet LNG.
Okay, Anantaraj bought at the levels of 511. Sachin wants to know what's the short-term outlook for this one. Jatin?
Wait for targets of 600 on the upside. Place a stop loss at 540.
Okay.
Trend is positive.
Got it. Well, the next one's from Gopinath from Nellore. He holding on to MTAR Tech at 1991. So got in very early. Mr. Chokalingam, is it a good time for her to book her profits and laugh to the bank?
I'm not able to understand this company's fundamentals and business model, so I would skip it. Sorry.
Okay. Do you understand Bajaj Housing Finance then? Because Kiyat Raji from Delhi wants to know as to what should he do with this counter.
Yeah, it is very easy to understand for any analyst. It's a great company, great management. Price to book value basis, it is easy to understand. Slightly stretched. I would be comfortable if it corrects, Otherwise, if somebody has a 3-year, 5-year view, definitely one can accumulate slowly.
All right.
Got it. Well, the next one is HG Infra, bought at 632 and 250 shares. Dennis has this question. Jatin, do you understand HG Infra and what's your opinion?
Yeah, see, technically there is a consolidation pattern and it has broken out in the previous trading session. I am expecting a move towards 732. So continue to hold and the stop loss should be placed at 580.
Okay. Indian Oil Corporation 500 shares bought at the levels of 149. Hold or sell? Murugavil from Chennai is asking. Jatin, your view on the charts?
Yeah, see, oil marketing companies have witnessed an up move. I'll be expecting a move towards 156 to 160 on the upside. Place a stop loss at 141 for the holding.
Okay.
Continue to hold.
Kiran wants to know if Biocon is a good pick for the long term. Mr. Chokalingam, would you recommend that?
No, I won't. I'm quite nervous about the debt on the book.
Okay. The next one is on NCC. The target price on this one, Rajesh is holding 1,000 shares at the levels of 201. Jatin?
On the upside, the stock is trading very close to a resistance of 175, 177.
Right.
Where we have the 200-day moving average. So avoid fresh entry should be avoided. Book profits at current levels.
Okay. TCS Express is the other one. Our viewer wants a 3-year view on the stock. Mr. Chokalingam, is it a pick in the logistics space or would you like anything else?
No, it's one of the good companies in logistics space. One can hold for 3 years.
Well, that is the end of Rapid Fire as well as this edition of Fast Profit. Mr. Chokalingam, it's been a pleasure. It's been quite entertaining as well having you on the show, and thanks for your opinions. So do you, Jatin. But viewers, all the time on this edition of the show, India Market Close comes up next. Thanks so much for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Welcome. You're watching India Market Close, and today is a tale of two markets. The Nifty in a different mood and the broader markets in a different mood. Look at the Nifty 50 right now and the intraday chart, still in the positive, but letting go of most of its gains through the day. The Sensex as well actually dipped into the red at some point if you pull up the intraday, and has now made a little bit of recovery but completely flat. What's very obvious when you see the Nifty contributors, we'll pull up the Nifty contributors and then we'll also pull up the Nifty heat map, is you have the big wicks which are kind of weighing heavy. HUL, TCS, Titan amongst others. On the winning side, today has been about auto, and interestingly Bajaj Auto, because of that buyback move, Maruti having another good day, as is RIL, Alex.
Absolutely. But what we're seeing is that very wobbly line graph for the Nifty 50. The broader markets is where the strength is at. So pull up the mid-cap index, which will likely at this juncture be at or very close to an all-time high, and the small cap index, which is also up over 1%. And this is basically showcasing that strength in the broader markets. To complete this picture, take a look at the advanced decline ratio, which is not too far, I think, from the widest point of the day, and that is in fact the case. So there is strength in the broader markets, and I think we've been saying this for the last 4 or 5 trading sessions, and that continues to be the case.
So which is why I started by saying the tale of two markets, very different picture. The Nifty heat map will very quickly tell you what's not working perhaps for the heavyweights, and the large caps, HUL, TCS weighing down, Tech Mahindra to some extent, Titan is seeing some pressure, as is Adani Ports, Coal India, Sun Pharma and Wipro. HDFC Life moving upwards, and some of the auto sector also doing fairly well. The sectoral heat map, let's pull up the sectoral heat map very quickly and show you what's working there. Nifty Auto will be in focus, like we said. That's one strong one today. It is the anniversary of Operation Sindoor, 1 year since Operation Sindoor, and you have, of course, top government officials talking about it. Defense stock roaring in today. The Nifty mid cap doing very well, but it's consumer durables and FMCG which is dragging a bit, as is IT. Overall, Alex, the fact is that the signs geopolitically are more positive than negative at this point.
Certainly, but just on the point of FMCG and consumer durables, I think even in the earnings that you've seen, for example, take GCPL, you have a situation where it's a mixed bag.
Yeah.
On some elements for the fourth quarter, it's actually good, but the outlook is looking murkier, it's looking cloudier. And so if you say that the first half is going to be problematic with regard to input costs, palm oil prices going up, margins likely going to be scrimped, that is why that is visible.
Yeah. If you pull up the top gainers and losers on the broader markets, there's a whole host of mid-cap and small-cap companies that have reported today, which have been pretty decent in their results. And you're seeing that
Godrej Consumer.
flare. Yeah, Godrej Consumer, of course, was in negative, as was KPIT Tech, as was Brigade. All of these from yesterday post-market close, as is Blue Star. City downgrade on Vedanta. That's why in pain there. But on the winning side, look at a Godrej Industries. So there is a report that they have laid out a path for the next 5 years, which is very positive. That's why Godrej Industries in focus. Piramal Pharma doing okay, as is Rosari Biotech. But some companies like Car Trade, Wonderla, that has just reported, we'll pull up those individual charts for you. Some decent set of numbers. I mean, Car Trade has been zooming through the day. We can pull up the line graph if possible. And then a Wonderla after that has cooled off now. But when the results came out, that was looking good, still about 6% up. Wonderla also after that spike has cooled off. So you're seeing quick reactions to results also coming in.
Certainly.
And in the broader market, they're actually better than what was expected.
Absolutely. We should talk about the key factors, though.
Yeah, absolutely. It was a dull day for the benchmark index. The Nifty has managed to stay above 24,300. Value buying is continuing in SMIDs, and the rupee continues to strengthen. The crude has fallen for a second consecutive session, and crude really is the story. If crude remains below $100 a barrel, a domestic buy on dips sentiment is likely to persist. Technical analysts are now identifying 24,300 as the new immediate support. A sustained move could open the path towards 24,500. Key resistance levels 24,365, 24,450, 24,590. Support levels at 24,200, 24,100 and 24,000 as well. Both the Nifty and the Bank Nifty now have cleared critical hurdles. The Bank Nifty closed above its 20-day EMA for the first time and key in quite a while, and key resistance levels were 56,120, 56,470. Support levels 54,980, 54,630. I want to pull up Brent before we get to our first set of speakers today and just show you where Brent is right now, because that's important, right? That you've seen maybe Brent under 100. You're at 99.99. And that has been positive, 99.47. Brent under 100 is great news. It's great news for the market. We hope we stay there. Jay Bala, founder and chief market technician at Catch the Chaos with us. Sudhir Bandyopadhyay Group chairman at IndiTrade Capital as well. Jay, is today the day to catch the chaos?
And hi, Tamanna. Not just today; it's been for a while. You know, you're rejoicing for crude dropping below 100. I've been pointing to crude crashing to $64. So the joys are just getting started. So and the recent secondary top WTI saw at about 110. That's confirming that important top is here. And we charters, we read news through the markets. And I've said this a couple of Tuesdays ago that the real peace deal is around the corner. And yesterday we saw tea leaves of that. So I'm sure there'll be a real peace deal between US and Iran that will be struck, and crude will crash to about mid-60s.
Wow, that's a big prediction. Jay, I don't know about that though, because the jury's out. Let me fix my collar. The jury's out on that. The jury's out on that. Let's talk about individual stocks that are looking attractive to you though.
Yeah, you pick any stock within the capital goods space, you're going to be doing pretty well. And I like Crompton Greaves Power industrial stock. And both the twin consumer also looking good. But I like CG Power more than Crompton Consumer. So I'm anticipating fresh, record highs closer to 1100 to 1200 odds level, and a stop loss of 760 would be ideal. And I also like Aditya Birla Capital with a stop loss of about 335. I'm bullish on it and expect that to be a short-term call, but CG Power is likely to be a medium to long-term call.
Yeah, CG Power is buzzing in trade today. Sudeep, I wonder if you're as optimistic of a deal being struck as early as tomorrow. Jay has just indicated what he thinks will take place, and I hope he is right. Are you as optimistic?
It's definitely a good space, and it's definitely a good company. So I'm not sure about the transaction and its exact contours and whether it will happen tomorrow or not, but it's a good space to be in, and it's a good company to invest.
No, Sudeep, I'm not talking about the company. I'm talking about the Iran-US trade deal, which is something that everybody wants to know about. Unless I heard wrong, Jay seems to think that that deal is going to be struck tomorrow and crude is going to crash. It's a big statement. Do you agree?
Well, sorry, Alex, I was thinking of CG Power. There are some rumors of some transactions, and I misunderstood that. But as far as US-Iran deal is concerned, I'm a little bit skeptical still, unfortunately. The way the statements are coming both from US and Iran, sometimes contrary to each other, sometimes ridiculing each other, sometimes threatening each other, I'm a little skeptical. I think it will take a little more time. Yes, they are moving towards a deal, but whether it will happen tomorrow or not, I'm not sure. My bet will be it will take some more time before the deal gets done.
So in that context, then let me ask you about this, right? From a fundamental standpoint, as you're looking at the market right now, you're seeing considerable strength in the broader markets. Are there any ideas that stand out to you, possibly companies that have reported their earnings and then settled after that initial spurt or otherwise, where you would like to deploy right now?
Well, I have been a bit contrarian there, Alex, and I have been liking Larsen & Toubro. They came out with the numbers which were definitely below expectation, or you can say if your expectations were subdued, they were as per the subdued expectation, because this quarter they had a lot of turbulence as far as West Asia is concerned. Even the first quarter is not going to be good, but the way the company is positioned, the way the businesses are moving, and assuming the deal gets struck somewhere, may not be tomorrow, but somewhere in the near future, I think Larsen & Toubro's West Asia business will be back on track. And overall, I think they are doing very well. So current level is a good opportunity for accumulating from a long-term perspective.
So we're going to wait and see what happens with the whole situation, but there's no doubt that there is some positivity right now. But let's talk about stock of the day. Craftsman Automation is in focus on the back of strong Q4 results and a robust growth outlook. What's working for Craftsman? Puni joining us for more.
Well, thank you for that. It's definitely been a very good quarter for the company, yet again, delivering a 22%, 27% growth in terms of revenue, but the profits, that's where the real kicker is. Now, company, of course, one of the major auto ancillary companies, recent listing in the last 5 years, so we'll put all of that into perspective. EBITDA has grown by 33%, margins at 16.1% is one of the highest that they have reported. Profits are up 75%, and this does not include any one-off. It's pure operating leverage benefit translating to the bottom line. Now, when you look at the segmental, there are 3 key segments that the company operates, and I'll just put some numbers into perspective also. The first one is, of course, the powertrain business. The names are mentioned, but this one is the powertrain business. The second one is aluminum products, and third one is industrial engineering. So all have seen a 20 to 30% growth. When you look at why do you need to track this counter, that's also important because they've invested over 4,000 crores in the business between FY18 and FY25, and this also includes the inorganic acquisition. So at that time, it was just a one-product company. They wanted to diversify away from commercial vehicles, which was the main domain, to establish domestic dominance, and machine cast iron components as well as aluminum casting is something that they do. So they compete with Bharat Forge in this segment, and we'll of course be speaking to the management of the latter very soon as well. Now, when you look at the street cred, that is also very important. Last 1 year returns, it's up 85%. 5-year return is 475%. And you saw the stock price before we started a segment at 8,500. The IPO price was 1490. So it's almost up 4 to 5x just in the last 5 years at this point of time. And finally, brokerages continue to remain positive despite the outperformance that we've seen in this quarter. Axis Cap and MK continue to have one of the highest target prices, while IIFL, ICICI and vendors follow through. So that's the picture for Craftsman. It's trading at 30 times price to earnings, so not cheap, but definitely a very strong set of results for the company.
Okay, thank you for that, Puneet, and quite a few strong mid-cap results as well. But the big overhang, or I would say push for the markets today, is coming from crude, isn't it? Brent crude has pulled back as optimism over a US-Iran framework deal tempers supply shock fears, prompting the markets to reprice. And we have a great graphic actually on how this panned out through the day, from when the news came and then you saw that dip in crude prices. We should play that full frame graphic. There you have it. So the news hit at about 12:20-ish, 12:30 about the US-Iran deal that may actually come in place. And then you had that market drop and that market price drop to $98 a barrel. It adjusted after the initial shock. But you still have it at about 99.97 or 99.94 thereabouts. I'm speaking with Dr. Iman Naseri, Managing Director of Middle East Research at FGE Nexant. Dr. Naseri, thank you so much for joining us here on NDTV Profit. Just trying to understand how sharp the fall can be if there really is a resolution. We had earlier in the show someone who tracks charts saying that crude could go, or Brent could go at least as low as $64. Do you think that we'll suddenly see a sharp drop once this resolves?
Yes, the price will drop further if there is a resolution beyond words. So far, all the perception has come through tweets and words, nothing on paper, nothing firm, and nothing binding. Even the ceasefire managed to put basically a cap on price escalation and pulled it a bit down, but it has been proven not to be a real resolution or one that has a promise of the end of conflict and end of basically the closure of the Strait of Hormuz on vessels going through the straits in and out. So yes, if there is a resolution, it will definitely pull the prices down. But remember, today's prices, in the absence of supply disruption, fair value we assess to be around $85. That's considering all the supply, available supply to the market, as well as demand balances and spare capacity of OPEC, which is always basically a factor in defining the path for the oil price, especially the long-dated price for oil is very much dependent on how much spare capacity OPEC has. Given zero spare capacity, meaning that OPEC currently on paper cannot produce any more barrel because it's constrained, even if the resolution it comes out, still it takes time for certain key producers within the Middle East to bring their production back to capacity, and hence the spare capacity is zero. At that current environment, the price should be around $85 to $90. What you see now basically is all premium, and basically if in fact the resolution, which has given an optimism to the market of over $10 already off the price that we had last week, if it falls apart, basically we're back into $110 to $120, $130, and could basically bring the average of the month above $120, which means we will basically, in a disrupted market without an optimism on a resolution, we should expect $30 to $40 premium on top, only because that kind of pricing is needed to solve the balance by killing some of the demand and demand destruction elsewhere in the market. So that's where we stand now. If the resolution comes, we will have another step down, but the prices will only go back to $75 to $85 range if the flows are fully restream and production is back fully, which is a month away from today.
It's a month away from today. Okay. So even the optimistic commentators that we've actually just spoken to have talked about a nearer term resolution based on the messaging that we've gotten over the course of the last few days. Dr. Mann, good afternoon. This is Alex here. I just want to understand from your perspective a couple of points, right? What you've described is the scenario as we see it right now. What is also going to take place at some point is the UAE's exit implication from the OPEC and the fact that they will raise production heading into 2027. And let's not forget that in any negotiations that take place with Iran, I'm guessing that Iran will also be wanting to have some of its oil being sold, because let's face it, from the perspective of their economy, this is going to be a key source of revenue. How does that fit into the calculation going forward?
Correct. We have so many parameters in the equation. The equation, you named at least two bold parameters, which is UAE potential of increasing production from their OPEC constraint or OPEC quota of 3 to 3.5 million barrels per day in recent past couple of years to potentially over 4 and perhaps closer to 4.5 million. That's another million or million and a half, depending on how you draw the lines of additional supply from UAE, which will only come to the market when, again, the strait is fully open and production is back, because it takes from weeks to months for the production to recover all to capacity. That's one equation. The second is, of course, the lifting of sanctions. And that takes time. Remember, there is one thing on signing that paper, and the second is sending to OFAC, OFAC putting it all in motion, and all the banks and all the companies, basically compliance, receive that. That's another few months of mechanism to bring that additional crude out of Iran to the market. But remember, we are in a market that today has over 10 million, closer perhaps to 12 to 14 million barrels of supply out of the market. So the disruption, the wave is so high that these other waves or the ripples that could originally each create a basically big wave and big price action, they are now part of the equation. So the good thing is that as we get out of this thing, we have enough time to basically solve. And I do not expect the OPEC, the UAE leaving OPEC to have much of an immediate price action. Yeah. What could happen is that basically it creates a new dynamic for OPEC to solve for basically a different set of mechanisms and cuts to take in those two parameters into account.
Sure. Thanks so much for taking the time, Dr. Iman. A pleasure speaking with you, and look forward to our next chat. All right, it's that time of the show when we go across to Somit Sarkar to find out what he's hearing on his checks on the dealing room in the city. Let's go across to Somit right now. Somit, it's been chop and churn for the benchmark Nifty 50, but the broader markets are showing strength. What are the individual counters that you're hearing about?
Well, the first stock on the list is Lenskart. That stock is down in trade, and what dealers are indicating here is that there's a buzz of a potential block deal that could happen tomorrow in trade. Kotak is one of the bankers for this deal, and it might happen at a discount of nearly 4% from the current level, is at least what the dealers have indicated. So keep an eye out for Lenskart. A big block deal is something that could happen tomorrow. For Crompton Consumers, there are buy flows on the large HNI desk. There's a buzz of a potential tie-up deal that could be announced when it comes to Crompton Consumer. So keep an eye out for that counter as well. For HDFC Life, the stock is up in trade today. Now, what dealers are indicating here is that there are strong buy flows or high buy flows on the DI desk. And earlier, an FII was a seller here, and this selling is largely over, and hence the reason we are seeing this bounce back on this in the share prices of HDFC Life. And lastly, a cash counter, NLC India, where there are buy flows on the large HNI and PMS desk, and dealers are recommending this stock to their clients for a upside of around 25 to 30 odd %. So keep an eye out for NLC India as well.
Quite a few stocks to watch out for. Thanks so much, Somit, for that. Jai Bala, Sudeep Bandopadhyay with us. Gentlemen, we had to have that conversation on crude because really, more than anything else, it's the most volatile asset that we're seeing across the board. But let me come to you, Sudeep, on a stock that we spoke about before we started that conversation on crude, which is Craftsman Auto. And the stock was buzzing in trade. We've identified it as one of the stocks of the day. Opinion on that? Is it overdone with a gain of 10.5%, or is there still upside potential left in the stock?
Well, it may not be immediately, but eventually I think the stock has potential. I think this is one of the companies which is doing exceedingly well in this auto amp space. And I believe that this will continue to do well. They have expanded their product portfolio basket, or whatever way you want to put it. And they have started servicing more and more clients. Also, export market, which they are now going to explore seriously, should give them some advantage going forward. So fundamentally, it is a good stock. Valuation wise, it is rich. It's not cheap, and it has moved up quite a bit. So maybe it is worthwhile to wait a bit before taking fresh position. But if you are holding, there is no need to exit or take any drastic action.
Quick 10-second answer. Does that hold true on the technicals as well?
Yeah, Craftsman Auto is looking quite bullish. I don't think the pullbacks will be too deep. I think it's already on a very sharp trending move. Anticipate fresh record highs in the region of 11,000 odds for Craftsman Auto.
All right, gentlemen, thanks so much for taking the time. Pleasure speaking with you as always. But we'll slip into a very quick break. We've got more conversations on the other side. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise.
Welcome back to India Market Close on NDTV Profit. Now shifting focus to a Raymond lifestyle. That stock is on our radar on the back of a solid set of Q4 earnings that have been reported. Let's head across to Somit, who's in conversation with the management. Over to you, Somit.
Well, thank you, Hiral, for that. Let's start our conversation with the management CEO of Raymond Lifestyle, Mr. Satyaki Ghosh. Sir, firstly, to start off with, when it comes to the input cost, your peers have also indicated that has increased sharply because of the Middle East issue that we are seeing currently. Can you elaborate what could be the impact of the same on your books, and how has April so far played out for you?
So two things. We are a very B2C company. As Raymond Lifestyle, we are consumer facing, and hence raw material, we are not a commodity company. So raw material does not decide our exact pricing or margins as such, but raw material prices, gas prices, they are up, and it puts pressure always. The freight prices are also a little up, let's say, because of West Asia crisis. But our margins have not got depressed. The only reason the Q4 gross margin looks a little lower is because last year we had some government subsidies coming in Q4 in some of our factories, which is not there this year. That is the only reason. Our margins are quite intact, and we have been able to pass on whatever little price increase that has happened in raw material. And we are looking at quite a good order book in Q1 and beginning of Q2. And hence, we are quite confident of the business right now.
Okay, when it comes to the inventory write-down, is that issue behind us? Because I believe 70 crore exceptional charge includes inventory write-downs and receivable provisions also in the apparel segment. So any risk of further cleanup that we could see going forward, or is that done?
No, it's totally behind us. It's also because, we have different categories in apparel, and the write-down is not in any of our major brands like Park Avenue, Color Plus, Raymond Ready to Wear, or Parks. We had started some new businesses, which from next quarter we will start reporting separately, like Sleeps, which was sleepwear, which is the business that we are trying to close down. And this is why we are taking a write-off largely on that business. But in future, from next quarter, we'll report our 4 brands separately and these new business ventures separately, so that this kind of confusion does not remain.
Right. When it comes to the branded apparel segment, now losses have narrowed on a sequential basis in the fourth quarter. But when does this segment break even, sir?
So apparel business, if you look at the 4 brands, we are high single-digit profitable, EBITDA. We are between 7 and 8% profitable. I'm again coming back to the same confusion. The way it is reported is some of the new businesses come and sit here in apparel and gets reported, and new businesses, obviously you invest. And that investment looks like a loss. But if you look at Raymond Ready to Wear, Park Avenue, Color Plus, and Parks, these are upwards of 7% EBITDA businesses, and we will start showing it from next quarter with the entire history corrected, so that you see how we plan to take it towards double digit over a period of 2 to 3 years.
Well, that was the management of Raymond Lifestyle, quite optimistic on the growth plans going forward. Back to you, Hiral.
Got it. Somit, so certainly a stock in focus. Let's pull that chart up and see what it's doing in trade. And in fact, while we're at it, just pull up the benchmark Nifty 50 as well, just hovering around that 0.1% gain range. So given up quite a bit of the gains from early on. But individual stocks in focus, one of them is Lenskart, because sources are saying that there has been a block worth nearly 3,500 crore rupees. In fact, Somit has those details. Somit, what are you picking up?
Yes, Lenskart remains in focus. A block deal worth nearly 3,500 crore is expected to happen tomorrow in trade. The block deal will be around 4%, is expected to be around 4% of the total equity. SVF, Light Bulb and Platinum Jasmine are the sellers, is what I'm picking up from my sources when it comes to the Lenskart block deal. A couple of brokerages that have been hired by these sellers, most likely it's Kotak and Avendus Spark. They are the most likely the bankers for this deal. They have already approached mutual fund for this block deal, and the deal is expected to be at a discount of nearly 5% from the current market price. Now, do remember the stock has already fallen around 4% and the discount is expected to be an additional 5% from the current levels. So Lenskart would be the stock in focus tomorrow, because a big block deal is expected to happen. Most likely it will happen in the first half an hour of trade.
Got it. All right. Thanks so much, Somit, for getting us those details, and watch out for Lenskart in trade. Of course, ahead of that, it's actually lost about 4% at the low point of the day as we speak right now. Let's focus in on Bharat Forge. It has reported its numbers for the fourth quarter, and except for a one-time loss that has affected the bottom line, it's a more or less inline quarter. There's also the outlook to talk about, and we've got a conversation lined up with the management in just a bit. But before we go to them, let's go across first to Puneet to give us a sense of what stood out with the earnings. Puneet?
Well, thank you for that. Just 3 key things. Numbers largely in line with the estimate that we are working with. So there's been a revenue growth of almost 17%. EBITDA is up 14%, and profit subsequently has also been up by about 17.5% to come in at 233 crore. Now, that has slightly missed estimate because of a one-time 100 crore impact, 98 crore impact on the consolidated basis. And the other impact was on the standalone basis of 450 crores taken on the e-mobility business. So just some perspective of that from the management will be something to watch. The reason why the stock is up is based on commentary. The company has highlighted that a 25% growth, revenue growth is what's expected, which will flow through the EBITDA as well as the profitability for the Indian business. So that's the reason why the stock is reacting positively today.
Yeah, thank you, Puneet, for that. The stock is seeing gains of nearly 6% as we speak. Amit Kalyani, Joint Managing Director at Bharat Forge, joins in. Amit, good afternoon and welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. Good set of numbers. I know it's that one time which has impacted the profitability in the fourth quarter, but overall, sentimentally, and if you have to look at it structurally, getting into FY27, how are you seeing the roadmap from here on? Because you are staring at global uncertainties as well on the macro front. So segments like defense, aerospace, or even for that matter, domestic auto, all of these are at the forefront of seeing supply chain issues. With the guidance that you've given for FY27, how are you seeing that resurgence in business come back in FY27?
So, hi, thanks. So basically, we see a very strong growth this year, driven by multiple factors and largely driven by a lot of the new product development and new sectors that we have targeted, plus a recovery in, the automotive sector, in the truck side, in the US, also to some extent in Europe, which we are seeing so far, and strong growth in India. If you look at our new sectors and some of the acquisitions that we have done, whether it's K-Drive, whether it's JSA, and also the new acquisition or the acquisition of stake in Fortuna that we've done, is all very complementary and synergistic with our existing business and will help us, increase our share of the wallet of the customer very easily and very quickly. So these are some of the measures that we have taken. Plus, we have made significant capex over the last 2 years, continuing into this year, which will add a very large new capacity for products that go into the data center market, into the semiconductor market, and many of these kind of markets where there is a lot of growth. Plus, there is a shift in supply chain from other geographies to people like us, and that's where we see a lot of opportunity. And we have secured a large amount of long-term business that will translate into revenue starting from the end, from this year itself.
Amit, good afternoon, Alex here. So therefore, let me ask you this. In the event that this geopolitical uncertainty gets resolved quicker than some might be anticipating, there are some very aggressive and optimistic ideas that it might get resolved this week, and I hope those people are right. But even if we're talking about a resolution in the first quarter, do you anticipate that there could be an upside to the guidance that you've given of 25% growth?
Look, I don't believe in counting your eggs till, the chickens till the eggs hatch. So, I hope that if that happens, yes, there will be some upside and, there will be, let's say, reduction in costs and therefore inflation and therefore overall market growth and sentiment will be more positive. But notwithstanding that, I think we're still planning for aggressive growth. And, our plans as far as the products that we have entered, the markets that we have entered, the acquisitions that we have made are all, aimed at helping us accelerate our growth and continue this pace of growth into the next few years.
Ask about that one-time hit and the impairment that you've taken on the the 450 crore hit that you've taken on the e-mobility business. What was the thinking and why in this quarter?
Honestly, you've seen how the whole world has been vacillating with electric mobility. In the US, there is a pullback. In Europe, there is ineffectiveness because of the technology supply chain not being in place, the value chain not being in place, and the overall infrastructure not being in place. I think that the e-mobility sector is picking up pace, but it's not growing at the same pace at which everybody expected it to take pace at. And plus, honestly, I think the Chinese value chain in this is very strong and they are going to dominate parts of the value chain for a very long time. So we decided that, in the absence of having a profitable path to profitability at the current time in the overall business, we will only focus on those sectors and markets which are profitable and especially like the repowering business where we see a lot of traction. And that's an area where we will focus, but we're not going to focus on anything and everything.
Okay,
and honestly, sorry, go ahead.
Yeah, Amit, on this, when you're talking about focusing on the businesses which are of value, then how are you looking at the EV portfolio? Because your electric mobility investments have led to some bit of impairments in FY26 as well as Alex and you've just been talking about. So if you have to talk about Kalyani Powertrain, how will that reshape your overall product mix so that you can actually focus on your high margin e-axles as well as the software integrated systems business?
Yeah, so as of now, we are already a big supplier of powertrain components to electric mobility, both on the passenger car side as well as a little bit on the CV side globally. I don't think we are in the, right now supplying an entire solution, but we are supplying components and subsystems that go into solutions. Another area where we have a lot of traction and business on e-mobility is on the aluminum die casting side. The area where we are defocusing right now is on the system level, because on the system level in India, the commercial vehicle market, which was our original, our goal, is going to be addressed partially through our acquisition of K-Drive, where we have the ability to make e-axles and components and even the whole e-axle for LCVs when we are already doing that. And it doesn't make sense to have two offerings within the same company to do that. So what we were trying to do in this, we are now winding that down and focusing on repowering within Bharat Forge, and then the e-mobility piece on the commercial vehicles will be largely focused on through K-Drive.
Okay. Another question I have for you over here is, in terms of the defense portfolio and aerospace execution, let's talk about defense. Order book, extremely strong, I think, if I'm not mistaken, at record high levels, and if you have to exit FY26 and look at FY27. So what's that timeline when it comes to where conversions are concerned, where orders will actually get converted into revenues in FY27? Because what? Almost 11,000 odd crores is what you're sitting on. So how much conversion are you looking at?
So this year will be the ramp up and let's say start of the ATAGS order. We will start delivering that from, I would say, probably from the end of second quarter or early third quarter. So we will have at least 2 quarters of delivery of ATAGS as per the current schedule which we are working with the forces and with the MOD. On the carbine also, we should start seeing deliveries by the end of the year. So those are 2 programs that will take off. And of course, we have multiple other programs which we have won under EP, and that will also deliver in this year. So between that, we should have a strong pipeline and strong revenues. In fact, in aerospace, we are seeing a phenomenally strong growth because we have won a lot of business, and our new landing gear manufacturing facility has been inaugurated. So that will also ramp up. And between that and the new orders that we have received, plus the the business that we do in making small microjet turbines, etc., is all going to ramp up this year. So that will give us a big growth. I would say a very strong double-digit growth in aerospace this year.
I was actually going to ask about that, Amit, and just to close out the conversation, this aerospace as well as the data center opportunity that you were talking about, this is, by my understanding and the way that you've described it, a ramp up year. And so therefore, if you were to describe closing FY27 and heading into FY28 perhaps, what is the kind of contribution that you anticipate these two to give to the whole pie?
So if you looked at our aerospace business, it was for the full year about 17% of our industrial exports, and for the quarter about 25%. I would expect that next year that the aerospace exports will grow from 25 and get to maybe 30-35% of overall industrial exports. Also, industrial exports per se are going to grow, so it's going to be a pretty big ramp up in aerospace next year. And on data center also, I think in the next 2 years, it's almost going to double the amount of revenue that will come from that sector.
Okay. Amit, I don't know if you're going to be in a position to answer this, but there was a lot of chatter ongoing with regards to Bharat Forge looking at acquiring a company into the explosive space. What is the status? I mean, there were conversations of Premier Explosives also. Again, it was a lot of word on
let
street.
me be very clear that we don't talk about rumors and things like that. And B, we don't have any plans of acquiring any explosives business.
Are you looking at your own?
Yeah, we're setting up our own explosives facility, and that facility groundbreaking should happen this month. And that plant is coming up in Madiksera in AP, which is on the outskirts of Bangalore. Well, not really outskirts of Bangalore. It's about 2.5 hours away from Bangalore. And that's where it's coming up. We've already acquired the land. We've applied for all the permissions, and construction will start after the groundbreaking takes place. Land is already in possession.
How big this business could be over time?
Very large. I mean, very, very large. See, also you have to understand it's not just for us an explosives business, but it is a solutions business because it allows us to move from making shells into making ammunition solutions. And that will be across the spectrum.
Got it. I think so. That's going to be another area we should be looking at as well. But thank you so much for joining in. Always a pleasure.
Thank you.
To speak to you. So that's Amit Kalyani talking to us about the quarter gone by, but more than that, it's about the newer businesses, what they're looking at. And what I like about Bharat Forge right now is that they're absolutely okay to impair and get away with everything which is not yielding results and focus on everything which they think is going to grow.
So Hiral, you probably have a better memory about these things than I do, right? But if you remember 3 or 4 quarters back or 3 quarters back or so, when they were going through a bit of a painful period, there was a fair degree of confidence to say that we will get past this.
Correct, absolutely.
And we've got quite a bit that is in the works, and that is coming now in favor.
It's coming through, and it's very rare to see managements who are nimble enough to shift focus right now, because it's difficult to change strategies very often, right? And that's the beauty when it comes to a company like Bharat Forge, the Kalyani Group. The stock nearly at the day's highs.
Absolutely. And we should ask both Rajesh Palvia, who's Senior Vice President, Technical and Derivatives Research, Axis Securities, as well as Dhananjay Sinha, who's a Chief Executive Officer and Co-Head of Equities and Head of Research at Systematic, about what they think of Bharat Forge. I don't know, gentlemen, if you heard that conversation, but Dhananjay, I want to come to you first. Bharat Forge, as things stand right now, a ramp up of aerospace division, defense business doing particularly well, the explosives business, they're going to break ground and that's going to contribute to revenue. They're confident of a 25% growth in FY27. What do you make of it? It's already up about 6% today.
So I think, the company has been doing fairly well as far as the aerospace business is concerned. The core business is in the commercial vehicle side. So the domestic business has seen a sort of a cyclical upturn following the GST reduction, etc. So I think they have been focusing a lot on the aerospace business, which is a high margin business. Their drag essentially has been in their businesses in Europe and US, where they had acquired businesses earlier. Over there, I think there is certain turnaround as far as the commercial vehicle business in US. I think that is turning around. We'll need to see what they are doing. They are talking about restructuring and all. But I think from the commentary that the management has actually spelled out, looks to be fairly robust in terms of the guidance. I guess in the defense space and the aviation space, I think they are sort of looking at a stronger growth, particularly the aviation business, which is a high margin business. So I think that is what they are talking about. The acquisition part is something that is being talked about. So we need to look at what it is. So as far as the management is concerned, it looks they're looking at a fairly explosive growth in the explosive segment.
Nice play of words. Dhananjay and Rajesh, allow me to come back to you because we've got exclusive information coming through. My colleague and Bureau Chief in New Delhi, Shrimi Chaudhary, joining in to tell us about what sources are telling her about a potential merger of Shipping Corporation of India with SCI Land and Asset. Already SCI Land and Asset, Shrimi, in case you haven't looked at the screen, is up as much as 12.5%. What's going on here?
Well,
Well, absolutely very, very crucial information and exclusive to us. What we are picking up, that government is exploring ways to strengthen the balance sheet and finances of shipping corporation ahead of its plan to expand to maritime project. What we've been given to understand that one of the proposal which is under consideration is to merge the shipping corporation with its erstwhile entities, that is Shipping Corporation, Land and Asset. Do remember that in 2021 it was carved out from the Shipping Corporation in order to facilitate the disinvestment and the privatization of Shipping Corporation, which was put on hold later by the government. Now, what they will do with this merger, what we are learning from the sources, that the Shipping Corporation will have access to the shipping, land and asset entities cash reserve, which is around 1,000 crore, and that fund will be utilized to expand these two projects, one with respect to Bharat Maritime and the second with a joint venture with tanker with oil marketing companies. So this two crucial project is going to have support and being anchored by Shipping Corporation of India, and this discussion is very crucial and coming at a time when the entire West Asia crisis has put focus on the maritime industry and the kind of dependence India has on the foreign carriers, and government has been pushing, boosting this entire sector, and we have seen numerous announcements in past 6 months to boost maritime industry.
All right, Shrimi, thanks so much for getting us those details. Now, Rajesh, if at all you have a view on Shipping Corporation of India or SCI Land, then do weigh in. And it's also very close to the end of the market trading day. And so therefore, do you have any ideas that you can buy today and sell tomorrow?
So if I look at the Shipping Corporation land asset, the company, the stock was in downtrend. A series of lower top, lower bottom formation was taking place. But since last couple of weeks, we have seen that recovery from the lower level. In this recovery, stock has managed to cross its 20-day, 50-day moving average and managed to cross its multiple supply zone on the near-term chart was at around 49 rupees. So looking at the near-term, short-term structure, there is a strength, but on the long-term chart, there is still weakness. So in this pullback, I think one can hold on the position as volume action is quite interesting. Stock managed to give breakout on the multiple supply zone, which is at 49. So trail is stop loss of 49. And if it continues to hold above 49, I think a possible up move towards 58 or 60 kind of level we may see in the near-term perspective.
Okay, so that's with regards to where SCI goes, that stock seeing gains of nearly 2% coming in there. But moving on, Godrej Industries, that's a stock to focus on. One of the top gainers today. Let's pull up that one on the screens. And the question over here is what's happening to that counter from here on. If you see the kind of announcement that has come in, that stock has been locked up in upper circuit full day, where they've said in terms of their 2031 vision that they are aiming for almost 5 lakh crores. We'll try getting Mahima to get us more details on it. But before that, Dhananjay, let me come to you. I know, Godrej Industries volumes are usually thin because it's a holding company. But the kind of gains that are coming in on the back of the ambitious growth roadmap, targeting a 5 lakh crore market cap by 2031, and they've proposed a new brand identity. What is your view?
No, I have not really looked at what the guidance has been. So if you can help me with the details.
Sure. So basically what they've come out and said is that they're looking at a market cap of 5 lakh crores by 2031. That's the first bit. Alongside a new purpose is what they're going to see, and a new brand identity. I'll get Mahima also to join in to tell us more. Mahima, if you're with us, help us with all the details that Godrej Industries has come out with so far, because that stock is locked in upper circuit.
Yes, so here basically what they've gone ahead and said is that their ambition is to reach that 5 lakh crore of market cap by 2031, and they've also gone ahead and announced and proposed a new brand identity. That's they've given a lot of details with regards to that, but I think the key important points were in terms of what they're aiming at from a long-term perspective. They're saying that the group has already delivered a compounded sales growth and profit growth of 20% CAGR over the last 5 years. and they've outlined the growth for the next phase, where they're expecting more than 15% annual sales growth, more than 20% EPS growth as a group. It also expects each business to deliver more than 18% return on equity at a steady state. What they've said is that the group intends to expand from 3 main of their businesses, that is consumer products, properties and agrovet, to 5 publicly listed companies. So that is an interesting one, because these 3 companies will be split into 5 companies is what it means, and these actions are expected to result in a combined market capitalization of 5 lakh crore over the next 5 years is what they're expecting. So overall, of course, the plan to kind of how they will be going ahead and separating these companies is still not given the detailed plan, but we'll be waiting and watching out for that. But overall, I think the ambitious growth of 5 lakh crore of market cap by 2031 is something that the street has liked, and that's why we're seeing that upper circuit on the counter.
Okay, all right, Mahima, thanks so much for getting us those details. 5 lakh crore looks pretty ambitious, all right. They've made a few strides today, Dhananjay, wouldn't you agree?
Yeah, I think it's a fairly ambitious and aspirational target the company has actually given us. I think as for this, I think they're talking about above 15% EBITDA growth and a fairly strong growth in top line as well. I think it is coming from multiple industries. It doesn't look like it will come from the consumer business, because it has got both domestic and global business. So unless they sort of do something dramatic, it's not necessarily coming from there, because the consumption space is fairly competitive. I think it must be coming significantly from the real estate business that they have, and they have been ramping up quite rapidly out there across multiple cities and areas. So I think that's where things might be coming from. Agrovet, of course, they are into the various agri input segment, but I think it is predominantly coming from the real estate business. So it appears that they have fairly aggressive plans out there. We'll see how it comes around. So let's look at the details, how it comes around. Of course, it looks to be fairly ambitious. It looks like they will be putting a lot of management bandwidth and strategic bandwidth out here.
Okay, so that's Godrej Industries. But 2 companies that we'll be talking about right now that will be reporting numbers tomorrow. First one is SBI, set to report Q4 earnings. Let's get in Shivam to understand what the street is expecting from the banking giant. The stock not really doing much in trade today. Shivam, what's the key expectation that you have from an SBI?
Well, yes, the largest PSU bank is going to report its quarter 4 earnings tomorrow. And starting with the key highlights that we should look into. So first one is the margins that are expected to come at nearly 3%. And also we need to see the impact of deposit repricing, how it will impact, as the 75 to 80% of the deposit repricing has already been done in quarter 3. So this remains a key monitorable too. The cost of funds are expected to stay stable, and the credit costs are expected to remain steady. Also, due to the elevated yields, there will be a decline in the treasury income that is expected. In terms of asset quality, it is going to be improved, and return on asset to stay stable near 1.1%. Also, in terms of advances growth, the SME and corporate segment are expected to lead the growth. Net interest income of the company is seen at 9.3% on YY basis, and the operating profit might see a downside of around 3% to 30,300 odd crores. The profit of the company is seen at 18,800 odd crores, and in terms of asset quality, the GNPA and NNPA improvement will be seen in both.
Okay, State Bank of India is something you should watch out for tomorrow, and quite a few talking points there. But let's close the loop and talk about Titan as well. Mahima with us to tell you what to expect. Mahima, a value growth potential, but the question is volume growth, right?
Yes, so Alex, surprisingly this time in the Q4 business update, they did say that they've seen volume growth as well in this quarter. So most certainly, the percentage of volume growth is something that we'll be watching out for. But I think in terms of numbers, revenue is expected to see growth of around 26% and EBITDA could rise around 34%. Profits could rise almost to 46%. And margins could remain in that 11% range of, the number that they've already guided for of 11 to 12%. In terms of Q4 business update, overall consumer business has seen a growth of 46%, domestic growth at 42%. Jewelry business, a strong growth of 46%, like-for-like growth at 48%, and high single-digit buyer growth after 3 quarters of flat growth is what they've seen. Watches division overall has seen a growth of 7%, eye care a 16% growth. Emerging business is also doing fairly well. In terms of international business, North America has seen a growth of 50%, but Middle East business was impacted because of the West Asia conflict. In terms of the overall GCC business, that grew by 37%, and international business overall combined, including the mass business, has seen a growth of 156% as per their business update. But I think the key things to watch out for will be the percentage of volume growth, plus as to the outlook on margins, because they've remained in that range bound margin range of 11 to 12% for quite some time now. So whether there would be some uptick in the margins going forward or not, that's something that I'll be watching out for sure for Titan, and probably some growth guidance from here on as to, because they're sitting on a very high base, as to how growth will look forward from here. So this is the overall view of what you can expect from Titan.
Thanks, Mahima, for that. Rajesh, quick one. SBI and Titan, any strategy ahead of the earnings?
So I think Titan is looking promising. Stock is almost trading near to its important support area of 50-day moving average. We have seen some bit of corrective move ahead of this number, but I think if stocks continues to hold above 40 to 50 mark, I think we may see some pullback action from the current level. If stock at all crosses 4400, then short covering action we may see in this counter, and then upward momentum towards 4550, even 4600 we could see for Titan. So those who are already on the long side of trade or want to buy, keep stop loss of 4250. SBI is looking sideways at this juncture. Still ahead of number, there is no as such much action or positioning we are seeing on the stock prices. But on the near term chart, 1120, 1130 is the immediate supply zone. If it crosses those levels, then here we may see short covering action to play out. Stock is almost trading near to important support area. So at this juncture, 1070 needs to watch closely post number, whether it's a break or not. If it's hold, then there is a high possibility of pullback action towards 1120, 1130.
Tata Steel. Okay. So that's with regards to where SBI and Titan go. A quick view, Dhananjay, in terms of where ABB is concerned. My question to you is, ABB, Swiggy, Tata Consumer, all of them will be reporting numbers as well tomorrow. Anything that comes to your radar that you like ahead of the numbers that you should be watching out for?
So I think basically the top line growth is something that we'll need to really look at. Also the margin situation, and I think mostly importantly the forward guidance is what we'll need to really look at. I think as far as the consumer space is concerned, on the retail side, I think we are seeing certain issues with respect to the same store sales growth. So that will need to be really looked at, and how companies are sort of supporting their profitability. It appears companies are expanding, especially in the retail space, by expanding stores and all. So I think that is what we'll need to really look at with respect to the retail stores. By and large, I would say that guidance will be the most important thing to really look at for in the consumer space.
All right, gentlemen, on that note, thank you so much for taking the time and for speaking to us on NDTV Profit. Just about a couple of minutes to go for the close, and we're likely ending just about at the flat line. No change for the Nifty 50 at the very least. And in fact, some bit of that is on account of the cool off in the Nifty Bank. So pull up the intraday chart in the Nifty Bank as well, and you will see that it has come off the high point of the day. That spike that you saw was not held for the Nifty Bank and not held for the Nifty 50 either. The strength in the broader markets, see, it's exactly replicable there. The strength of the broader markets, because we're ending the mid-cap index at a new high, and the small cap index also with gains of over 1%. This is something of a trend that we've seen in the recent past. Remember that you had gains of about 17% for the benchmark small cap index in April and about 3 to 4% in May so far. 11 or 13% or thereabouts gains in April for the mid-cap index as well. That is being built in May. But pull up the heat map for the Nifty 50 as we're drawing to a close. It's 328, and this is more or less the picture that you're going to see with HDFC Life, Bajaj Auto, and a couple of other names in the automotive pack doing particularly well. Mahindra and Mahindra up and about and doing well. Maruti Suzuki also gaining about 0.2%. Larsen and Toubro up about 0.4%. But it's even Stevens more or less between the advances and the declines on the screen. On the losing end, you have HUL and the rest of the consumption pack not doing particularly well. Auto may actually be an exception to the rule today. Tata Consultancy Services tighten ahead of results, losing ground as well. Just a few seconds to go for the close of trade, and this is the picture that you're closing at. In fact, ICICI Bank, Axis Bank closing very close to yesterday's close. So it's a lot of ground being lost perhaps through the day for some of these frontline banking counters, and so too for the Nifty Bank as well. Reliance Industries also ending in the red, just about 0.2% or so, and not lending support. So very quickly take a look at the snapshot of the contributions to the Nifty 50's move today. We're ending more or less at the flat line. Mahindra and Mahindra, Bajaj Auto, NTPC, HDFC Life on the losing end, HUL and TCS. And very quickly to close out, let's look at the sectoral picture, because you'll see defense is a pack right on top. It's gaining as much as 3.3%. You have auto that's done particularly well. And then you have energy and a couple of other smattering of sectors that have done okay. On the losing end, you have IT as well as consumer durables and FMCG. This pack under a tad bit of pressure. Now, it's been an interesting day of trade. At the very least, you can say that you've not lost ground after yesterday's piping hot rally. And the question is, how do we end this trading week? It's been a good one so far. Let's see how it ends up. But there's lots more that you will see over the course of the evening on NDTV Profit. So I'd encourage you to stay tuned. From the team that put the show together, thank you so much for watching.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. we dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no harm.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that gets you a snapshot of everything that has happened in today's trading session, as well as news and updates from within the country and across the globe. First things first, let's take a very quick look at the markets. Now, markets, of course, ended the day in red, with Nifty 50 struggling to end the day above 23,200, Sensex closing about 114 points lower, broader markets also outperforming benchmarks. But when you talk about the sectoral picture as well, it was IT and FMCG on the back foot, auto and energy that were actually gaining in trade. Moving on then, let's talk about Citi turning cautious on Vedanta, downgrading the counter to a sell on concerns around earnings visibility and cash use. The brokerage flags heavy dependence when it comes to the zinc business and remains bearish on zinc prices. Citi also highlights a change when it comes to dividend policy, saying that the company is no longer tied to earlier payout commitments that it says could really raise uncertainty around how cash is deployed, with current market prices suggesting limited upside. And brokerages remain positive on Aptus Value Housing after its fourth quarter results, pointing to a steady growth and improving asset quality. Investec and Jefferies maintain a buy rating with target price around 315 and 365 rupees respectively, citing stable performance and controlled costs. Now, in terms of commentary coming in from Morgan Stanley, they're talking about how there's an overweight rating that they have with a higher target near 375 rupees as well. So that's something that you're looking at, supported by strong returns and attractive valuations versus peers. Moving on then, let's talk about Brigade Enterprises that posted a weak set of numbers in the fourth quarter, with pre-sales missing expectations and cash flows also under pressure. Now, the company is saying that collections remain soft while higher construction spends and overheads weigh on operating cash flows. Even as realizations improve and leasing stays strong, margins slip and profits decline sharply. Retail footfalls and hospitality continue to grow, but cash flow stress remains a key monitor going forward. Moving on then, let's talk about Kansai Nerolac that reported a strong set of numbers in the fourth quarter. Now, the stock, of course, was buzzing away in trade, 5.5% uptick coming in at close also. But in terms of the earnings fine print, it was largely led by continued recovery in decorative paints and steady demand when it comes to industrial coatings. Growth, in fact, remains healthy, and that's across new products, construction chemicals, and projects as well. While automotive demand, that's something that supported volumes really, and performance coatings stayed firm on a strong order pipeline, like I mentioned, and the company also took some selective price hikes to manage inflation pressures also going forward. Moving on then, let's talk about Bharat Forge that reported an inline set of numbers in the fourth quarter with revenue rising nearly 18% and operating performance staying strong. However, profit declines after one-time impairment charges that were linked to its electric vehicle business. Now, the company remains optimistic when it comes to FY27, guiding for somewhere close to 25% revenue growth backed by stronger exports and order execution. Moving on then, let's talk about Emami that announced an entry into the personalized beauty and personal care space also with the acquisition of a majority stake in Inknut Digital, and the company plans to buy the remaining stake over the next few years, 4.5 years to be precise, and the deal is funded entirely in cash, values the business at a moderate multiple. And in terms of this particular company, it owns digital first brands, so you're talking about Vedix and Skincraft here. And the acquisition really strengthens the company's presence in premium data-led beauty products. Moving on then, let's talk about Meesho that delivered a strong set of numbers in the fourth quarter, 1% gain thereabout coming in on the stock as well. But when you talk about the earnings fine print, sharp revenue growth is something that you're looking at, improving contribution margins as well, and losses narrowed meaningfully as operating leverage improves, even as the company also continues to invest in tech and platform capabilities. New engines like Meesho Mall or content-led commerce continue to scale, while user activity and order momentum remain healthy. In terms of the management commentary as well, they're maintaining a strong growth focus in the near term. And moving on then, let's also talk about Hexaware that posted a strong first quarter also with sharp margin improvement and steady growth momentum, while constant currency revenue remains largely flat and profitability improves on better execution and tighter cost control. AI continues to drive deal wins with traction across large clients and headcount rising for the 11th straight quarter. Management reiterates its full-year growth and margin outlook despite ongoing macro pressure in some verticals. Moving on then, let's talk about the word coming in from brokerages that stayed positive on Paytm despite a softer fourth quarter marked by higher marketing spends as well as missing incentives. Citi, in fact, is maintaining a buy rating here with a target price close to 1,300 rupees, citing improving Corp payment margins and strength when it comes to the merchant and financial services. Jefferies also keeps a buy with a target price of close to 1,350 rupees here as well, saying that revenue momentum offsets the lack of UPI support. Both expect operating leverage as well as normalizing margins to support earnings. Moving on then, let's talk about Godrej Consumer that delivered an inline set of numbers, largely of course the stock was down about 5.5%. But when you talk about the earnings fine print, you're looking at a little bit of a miss coming in terms of profits, and that's something that was weighing on the stock. Growth is led by a strong India business though, especially home care, while personal care remains modest. And the company also flagged near-term margin pressure when it comes to higher raw material costs. That was partly offset by pricing and operating leverage. Brokerages in fact stay positive but turn a little bit cautious when it comes to margins, with Citi and Jefferies cutting targets while maintaining buy ratings. Moving on then, let's talk about Polycab shares that jumped sharply after its latest earnings. Of course, 6.5%, almost 7% uptick that you're looking at for this particular counter at the end of the trading session. But you did have positive management commentary coming in, signs of market share gains. That's something that you're looking at as well. And the company also, of course, reported strong momentum when it comes to the core cables and wires business, supported by healthy demand trends that you've seen of late when it comes to this particular company. And in terms of the commentary also coming in from the management, they're talking about how they're boosting investor confidence with the stock rallying strongly in trade as outlook remains upbeat. Moving on then, let's talk about Raymond Lifestyle that reported a strong set of numbers in the fourth quarter as revenue rises nearly 19%, driven by solid domestic demand and a stronger premium product mix. In fact, when you talk about the operating performance as well, that improved sharply while the company focuses on premiumization, wider distribution, as well as expanding its presence, and that's across European markets. Moving on then, let's talk about Craftsman Auto that reported a strong set of numbers in the fourth quarter here as well, with revenue rising 27%, profit jumping 75% on a year-on-year basis. Of course, the stock was also cheering this particular gain also coming in for this particular counter, with that 11% gain also coming in at the end of the trading session. But in terms of growth, when you talk about it, it's across the segments. So you're talking about powertrain, aluminium products, engineering segments as well. While margins continue to improve, the company also keeps its focus on global expansion after heavy investments over the past few years. Moving on then, let's get you some business news. Now, the proposed offer for sale in the National Stock Exchange could see a modest equity dilution as several public sector shareholders line up to pay stakes. And in fact, sources are telling your channel that the sale could be led by large PSU holders, including insurance and banking entities, with institutional investors also expected to participate. Now, this particular move, it's aimed at unlocking value and also broadening the shareholder base ahead of the exchange's listing plans. Moving on, then, the government is considering a merger between Shipping Corporation of India and SCI Land and Assets as part of a broader maritime expansion strategy. Now, sources are telling NDTV Profit that this particular move, in fact, could unlock over 1,000 crore rupees in cash, strengthen SCI's balance sheet, and also support fleet expansion as India pushes to reduce dependence on foreign shipping lanes. Moving on, then, let's talk about oil prices as well, because oil markets are reacting fast to diplomacy. Now, crude prices slipped sharply after reports that the US and Iran could be nearing a deal to end the war, easing fears of a prolonged supply disruption. Brent briefly fell below $100 a barrel as well before rebounding, and showing just how fragile sentiment really remains at this point in time. Equity markets, of course, cheered the possibility. But when it comes to oil, the real trigger is going to be concrete action, especially any move toward the reopening of the Strait of the Hormuz. Until then, volatility is going to be staying firmly in control. Moving on, then, let's talk about Shell as well. War-driven oil prices are delivering windfall profits for energy giants, and I'm talking about Shell that posted a better than expected set of first quarter earnings, helped by surging crude and trading gains as the Iran war really choked Hormuz flows as well. And you're talking about rival BP that has already reported profits more than doubling, while Equinor also logged its strongest quarter in years. Now, with nearly 1/5 of global oil and LNG normally moving through Hormuz, the conflict has redrawn the profit map and really lifted big oil even as global energy risks still intensify. Moving on, then, let's talk about China-made electric vehicle sales that are showing resilience. Deliveries from the Shanghai plant, in fact, rose for a 6th straight month on a year-on-year basis, even as competition really heats up at home and abroad. Nearly 80,000 Model 3 and Model Y units, that's what you're talking about, that was shipped, including exports to Europe. When you're talking about volumes, though, you're looking at a dip on a month-on-month basis. But the year-on-year momentum, in fact, still is suggesting that demand is holding up, even in an increasingly crowded EV market. Moving on, then, let's talk about India's push to reduce dependence on China in electric mobility that is picking up pace. Tata Group and JSW Group are set to invest nearly $1 billion in EV and battery tech. And that's according to some reports that are suggesting this as well. And when you talk about these two big companies, they're building dedicated R&D centers to develop next-generation batteries as well as advanced EV systems, signaling a strategic shift toward homegrown capability as global supply chains turn more uncertain. Let's also talk about global shipping giant Maersk that has beaten first quarter profit expectations as well, reinforcing its status as a bellwether for world trade. But the company struck a cautious note, though, so you should be looking at that as well, because they're warning that the US-Israel war on Iran has clouded the outlook when it comes to freight rates and costs. While the company has held on to its full-year guidance and expects global container volumes to really grow, it says that higher energy prices and disruptions when it comes to key Gulf trade lanes, that could be weighing on momentum going forward. Moving on, then, let's talk about General Motors that is recalling more than 40,000 vehicles in the United States after regulators flagged a brake safety issue. The U.S. National Highway Traffic Safety Administration says sediment found in the brake fluid could increase the risk of a crash. The recall, in fact, affects just over 40,000 vehicles, and GM has not reported any injuries linked to the issue so far. And European governments face a fresh fiscal risk as they consider measures to shield households and businesses from rising energy prices, and that's according to Fitch Ratings. In fact, a senior Fitch analyst warns that broad, untargeted support could strain public finances if extended. That said, support announced so far after the Iran war remains far smaller than the massive packages rolled out during Russia's invasion of Ukraine back in 2022. And moving on to some national news now, TVK chief Vijay made a fresh visit to Raj Bhavan on Thursday, that is today, meeting governor to also press his claim to form the next Tamil Nadu government. Now, the move follows an earlier setback, with the governor seeking concrete proof of majority support. While TVK remains the single largest party after a fractured verdict, it is still short of the 118 MLAs needed in the 234-member assembly. With swearing-in plans also stalled at this point in time, all eyes, of course, are going to be on smaller parties whose backing could really decide who finally takes charge. And amid intense post-poll churning in Tamil Nadu, the leaders of the VCK and left parties met DMK chief M.K. Stalin today to also discuss the support proposal extended by Vijay's TVK. Sources, in fact, or reports, in fact, are saying that Stalin told alliance partners that the decision was entirely theirs, leaving them free to weigh their political interests. The meeting underlines the fluid nature of alliances as parties really reassess the next move in the evolving government formation scenario at this point in time. And on to the national capital then, where Delhi police have busted a major counterfeit drug racket, arresting a 4-member syndicate accused of making fake life-saving medicines. The gang allegedly supplied spurious cancer as well as liver disease drugs across eastern and northeastern India. Investigators are saying that the mastermind Manoj Kumar Mishra turned to fake pharma after his pandemic-era business collapsed. The racket operated under the front company Unitel Pharma, putting critically ill patients at grave risk. And marking the anniversary of Operation Sindoor, Jammu and Kashmir Governor as well, Manoj Sinha, paid tribute to the courage and sacrifice of India's armed forces. In fact, he described the operation as a powerful reminder of the nation's unwavering resolve to defend its sovereignty, but also protect innocent lives. According to an official statement, Sinha said that Operation Sindoor showcased the extraordinary bravery and professionalism of the men and women in uniform who responded decisively after terrorists targeted civilians in Pahalgam, sending a clear message that threats to peace will be met with firm action. And on to some international news, then. The United States and Iran appear to be inching toward a limited temporary agreement to halt the war. Reports, in fact, are saying that the talks are centered on a short-term one-page memorandum that is aimed at stopping the fighting, not resolving deep disputes, though. Iran is reviewing a U.S. proposal with follow-up talks expected, but major sticking points, in fact, remain at this point in time. Crucially, the draft framework leaves out Washington's key demands on Iran's nuclear program, underlining that any deal at this stage would be only at an interim pause and not a lasting peace, in fact. Moving on then, let's talk about President Trump saying that the Iran war could end quickly as Tehran reviews a US peace proposal aimed at formally halting the conflict, but optimism in Washington is being met with skepticism in Tehran, where lawmakers dismiss the offer as an American wish list, and the proposal would leave critical issues unresolved, and that's something that's quite the concern, including Iran's nuclear program and reopening the Strait of Hormuz. While markets have reacted to some of those deal headlines, officials on both sides admit major gaps remain, and that's something that we'll see unfold in this week itself. Moving on then, France is stepping in as airlines buckle under a jet fuel shock triggered by the Middle East conflict. The government is preparing emergency support from tax deferrals and social security relief to operational flexibility after carriers really warned that fuel shortages could really hit within weeks, with Europe also sourcing nearly 3/4 of its jet fuel from the Middle East. Officials are racing to avert widespread flight disruptions this summer as energy volatility spills straight into the aviation sector. Moving on then, let's talk about Russia, that says that its air defenses shot down dozens of drones targeting Moscow just days ahead of the May 9th Victory Day commemorations as well. City officials are saying that Ukrainian drones have been intercepted repeatedly as security tightens in the capital as well. Moscow has warned that it will respond forcefully to any attacks during the celebrations, raising fears of further escalation as the symbolic parade approaches as well. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Ignition. Liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So I was really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked, what's happening to my son.
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There be room for people in your space caps?
The aspiration is 5 years down the line. So we want to make space flight as easy as air flight.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global.
Reports suggest Iran-US have reached agreement to ease Hormuz blockade. Trump signals very good talks and a possible breakthrough. Pakistan offers to host peace talks but stays tight-lipped, citing mediator role. Oil finds its footing. Oil prices fall below $100 a barrel as US-Iran tensions keep the traders focused on Strait of Hormuz. Markets now watch Tehran's next move. Market ends on a somber note as investors watch for any potential developments around the US-Iran conflict. Nifty closes above 24,300 mark. Broader indices outperform the benchmarks as mid-cap indices notch fresh record levels. Rupee strengthened significantly against the recent record low of 95 rupees 44 paise, recovers around 120 paise in two sessions to end at 94 rupees 25 paise. Forgings and defense equipment major Bharat Forge Q4 numbers are in line except a one-time loss impact profitability. Bharat Forge profit falls 17% YOY, targets 25% revenue growth ahead. In an exclusive update, sources tell NDTV Profit that the government is considering a merger of Shipping Corporation of India with SCI Land and Assets to fund its big maritime expansion plans. Key Air India board meet underway, being attended by N. Chandrasekaran, Campbell Wilson and Singapore Airlines CEO. According to sources, cost-saving measures reviewed, financial performance and next CEO succession are also on discussion table. NDTV Profit's Newsbreak confirmed IIFL Capital to allot 18% stake to Fairfax in a preferential allotment of shares. The move gives Fairfax effective control of the company. IIFL shares jumped over 5% after this announcement. Vijay versus government standoff intensifies. Sources say governor still not convinced about numbers. Says Vijay will be sworn in as the chief minister only when he proves his majority. Meanwhile, the resort politics in the AIA-DMK camp. Pro-Vijay MLAs in resort without EPS consent. Operation Sindoor, a year since India launched one of its most intensive military operations. It remains a defining moment in the country's response to cross-border terrorism. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar. Let's take you through all the important developments of the day today. First, also starting with the war update as well as its impact overall. Now, mixed signals are coming in over Iran-US agreement. Reports from Arabia suggests that Washington and Tehran have reached an understanding to reach and ease the blockade and gradually reopen the Strait of Hormuz. Reports also suggest that intense communication is underway between the parties, with key steps being expected to be really pulled out in phases. And also the signals are being welcomed. Pakistan's foreign ministry said that it supports indications of a deal to end the war and calling itself a mediator and refusing to also disclose details to preserve the trust. Islamabad said it would be honored to host peace talks. Adding to the momentum, US President Donald Trump said that he had very good talks with Iran and that a deal was very possible. Listen in to what Trump said, and then the foreign policy analyst Sierra Claire's take a possible peace talk.
They want to make a deal badly, and we'll see if we get there. If we get there, they can't have nuclear weapons. You know, it's very simple. But what's not to submit? So they had a Navy with 159 ships, and now every ship is blown to pieces and lying at the bottom of the water. They had an Air Force, lots of planes, and they don't have any planes. They don't have any anti-aircraft. They don't have any radar left. Their missiles are mostly decimated. They have some. They have probably 18, 19%, but not a lot by comparison to what they had. And their leaders are all dead. So I think we won. We've had very good talks over the last 24 hours, and it's very possible that we'll make a deal. The stock market's higher now than when we started this war. And I thought oil prices would go to $200, $250. It's at $100 now. And I think you're surprised, and I'm surprised. But even if it went to 200, it would have been worth it. I understand that. We had just set a record, 50,000 on the Dow, 7,000 on the S&P, a record. And I said, I hate to do this, but we have to make an excursion down to Iran because we can't let them have a nuclear weapon.
There is movement happening on these U.S.-Iran talks and easing the blockade and Operation Freedom, which the U.S. had already proposed to get the ships that were stuck in there out. And so we'll just, have to take it one day at a time. I think the Iranian government is, reaching a point. I was reading some reports that said, 2 to 3 weeks before total collapse, before irreversible damage on their oil infrastructure. So there are people in Iran who don't want to see that happen. And, it's possible that those people have been able to push the decision makers to some kind of agreement.
All right, the whole world is really looking out for some agreement between US and Iran in those new talks that have really surfaced, and hopes are high. Well, crude prices, they have slumped sharply amid hopes of those peace talks, and oil prices fall below $100 a barrel. Brent now hovering around $98 per barrel range, while WTI has slipped to $92 to $94 per barrel levels. Now, the sharp fall comes amid also growing optimism over a possible US-Iran peace deal and expectations that supply from the region could really normalize when we talk about the fuel supply. Meanwhile, rupee strengthened significantly against the recent record low. Remember, it touched a record low of 95 rupees 44 paise against the dollar just a few days back, and recovers around 120 paise in 2 sessions to end at 94 rupees 25 paise against the US dollar. All right, let's talk about the markets, and they ended on a mixed note, with the Nifty 50 really slipping marginally but holding above the crucial 24,300 mark. Sensex declined a little over 100 points today to settle around 77,800 levels. The broader markets, however, outperformed the key indices today, with mid-cap 100 closing at record high. crossing the 62,000 mark for the first time. Let's take it across to my colleague Varsha, who's joining in with all the market action of the day. Tell us, Varsha.
Well, Nifty ends in slight red, closes though about 24,300 mark. HDFC Life Insurance, Bajaj Auto are the top gainers, while HUL and Tata Consultancy are the top losers. Broader markets outperform benchmark. Nifty Small Cap 250 and Nifty Mid Cap 250 both and in green, while Godrej Industries and Endurance Tech are top gainers. When it comes to Nifty Mid Cap 150, Godrej Industries again over almost 20%. Now talking about Tejas Networks and Piramal Pharma are top gainers when it comes to Nifty Small Cap 250. Tejas Networks gains over 15%, while all Nifty sectors end on a mixed note. Nifty Auto is the best performing sector. Bharat Forge and Exide Industries are the top gainers in Nifty Auto. Nifty Auto gains for the fourth consecutive day. Nifty IT and Nifty FMCG are the worst performing sectors, down over 0.5%.
All right, thank you so much, Varsha, for taking us through all the market action of the day. Now, while concerns around the war overhang really persist and the Nifty really continues to remain sluggish, Gurmeet Chadda, the managing partner and CIO at Complete Circle, says that one key area of concern is the sustained FII selling, especially at a time when global risk appetite and also overseas flows have otherwise remained strong. Listen in.
I think one concern which is there is that FIs are still big sellers. Yesterday also we saw 6,000 crore kind of a selling. I think YTD they are already $15-16 billion out of India. And this is coming when globally flows have been very good. Just look at Kospi, look at Taiwan, look at some of the emerging markets. So I think the pressure now is more supply side. And I think the market is now factoring in some kind of a resolution happening over the next few weeks. But it's the supply pressure, I think, which may keep things under check for some more time.
Right, let's take it straight to an exclusive update. Well, sources tell NDTV Profit that the government is considering a merger of Shipping Corporation of India with SCI Land and Assets to really fund its big maritime expansion plans. My colleague Shrimi gets us all those exclusive details. Shrimi, tell us.
Well, absolutely very, very crucial information and exclusive to us. What we are picking up, that government is exploring ways to strengthen the balance sheet and finances of Shipping Corporation ahead of its plan to expand two maritime projects. What we've been given to understand that one of the proposal which is under consideration is to merge the Shipping Corporation with its erstwhile entities, that is Shipping Corporation, Land and Asset. Do remember that in 2021 it was carved out from the Shipping Corporation in order to facilitate the disinvestment and the privatization of Shipping Corporation, which was put on hold later by the government. Now, what they will do with this merger, what we are learning from the sources, that the Shipping Corporation will have access to the Shipping Land and Asset entities cash reserve, which is around 1,000 crore, and that fund will be utilized to expand these two projects, one with respect to Bharat Maritime and the second with a joint venture with Tanker with oil marketing companies. So this two crucial project is going to have support and being anchored by Shipping Corporation of India, and this discussion is very crucial and coming at a time when the entire West Asia crisis has put focus on the maritime industry and the kind of dependence India has on the foreign carriers, and government has been pushing, boosting this entire sector, and we have seen numerous announcements in past 6 months to boost maritime industry.
All right. Thank you so much, Shrimi. A boost to the maritime industry. Thanks so much for all those exclusive details. Let's shift focus on the airlines, and Air India's board of directors met in Delhi today amid the loss-making airline facing multiple headwinds in the wake of the Middle East conflict. Now, according to sources, discussions really centered around the airline's financial performance for the previous fiscal year, as well as the projections for the new financial year. Now, the board also reviewed a range of cost-saving measures. In fact, my colleague Danish now brings us more details on what he's gathering about this particular discussion and the outcome of that board meeting. Danish, good to have you on the show. Now, where is the discussion really going? What are the solutions that Air India is really looking at? And what about succession?
Well, that's correct. A very important board meeting was held at the Air India headquarters in Gurugram today, and it was attended by Mr. N. Chandrasekharan, who is the chairperson of Tata Sons, and along with him, Mr. Campbell Wilson, who is the CEO of Air India, and other board members are part of this meeting. As you very rightly said, that the discussions initially in the board meeting were around the financial performance of the airline, and what we're learning from sources is the fact that in FY26, Air India might have suffered losses of more than 20,000 crore rupees, and in order to sustain that, and how can a quick turnaround can be planned, all of this was discussed in the board meeting today. Besides this, as you rightly mentioned, that certain cost-saving measures were also discussed by the board. But as far as the outcome of the board meeting is concerned, what we're learning from our sources is the fact that Campbell Wilson will be holding a town hall tomorrow with all Air India employees across the country, and then we will definitely get to know that what are certain measures that the board has decided. So tomorrow is a big day for Air India, as it can really shape up the future of the airline, because we all know that Campbell Wilson is on his way out, and there were sources also telling us that while the next CEO was not on the agenda, but they could have been a little bit discussion between the board members that who could be the next CEO of Air India. But although let's see, the next big challenge for Air India right now is to get the new CEO and get things up and running in FY27. And we'll have to wait and watch for some more time until we hear more from our sources. But to conclude, a very important meeting was held at the Air India headquarters today, and it is expected that some more details will come out soon.
All right. Thank you so much, Danish, for giving us all the details about what we are gathering on Air India's board meeting today. Many, many crucial aspects to be watched out for the loss-making airline. Now, Bharat Forge has reported an in-line quarter with profitability really taking a hit due to a one-time loss of 99 crore rupees. Even as the operational performance remains steady for the company, and the company's net profit fell over 17% annually to 233 crore rupees. Revenue, however, grew a strong 17.5% to 4,528 crore rupees, while EBITDA rose over 14% to 778 crores, coming in slightly ahead of the estimates, and margin stood at 17.2%, broadly in line with the street expectations, though lower than last year. Now, the company has also announced a final dividend, and also we caught up with Amit Kalyani, the joint managing director at Bharat Forge, on the back of the quarterly results and the way forward. Listen in.
We're still planning for aggressive growth, and our plans as far as the products that we have entered, the markets that we have entered, the acquisitions that we have made are all aimed at helping us accelerate our growth and continue this pace of growth into the next few years. In the absence of having a profitable path to profitability at the current time in the overall business, we will only focus on those sectors and markets which are profitable, and especially like the repowering business where we see a lot of traction, and that's an area where we will focus, but we're not going to focus on anything and everything.
All right, Amit Kalyani of Bharat Forge there on the earnings. Now let's take it to the deal street, and a large deal has been really announced today when it comes to the transactions in companies, and IIFL Capital has announced that Fairfax is going to become their co-promoter and also a controlling stakeholder in the company. And now remember that this is a news break that NDTV Profit had first reported about a few days back, and this has been confirmed. So Fairfax is going to become the promoter by owning over 51% stake in the company IIFL Capital. The first tranche of this particular transaction is 18% stake by way of preferential allotment of shares that Fairfax will take for 2,000 crore rupees from IIFL Capital, and that fund infusion will help the company in furthering their business growth. Now remember that after this, and this has been done at 350 per share, therefore the stock also rose to match those levels of the deal, because this deal also triggers an open offer for the larger shareholders of the company, and Fairfax will be launching that particular open offer also soon. Remember, Fairfax by way of this will also be getting 2 board nominees. I spoke to the management on what this deal really means, the rationale. Listen in.
The reason
this transaction was done is that A, it helps us to improve and augment our balance sheet and financial strength, also gives us necessary capital for growth in the near future. And more importantly, the way the transaction is structured is that Fairfax wants to become a promoter. So they have an intent to take their shareholding to 51%, post open offer, post pref allotment, post everything, and they also want to be a part of the promoter group. So we think that we'll benefit from their name, their brand, their financial strength, global expertise, international standing, and the use of proceeds of this fund is basically to improve our financial standing.
All right, so that was IFL Capital. Now moving on, NSE's much awaited OFS could see a 4 to 5% equity dilution, with PSU stakeholders really preparing stake sale worth nearly 15,500 crore rupees. SBI alone may offload over 1% stake in the exchange. Nimit joins in with all the details on what could be one of the biggest market offerings in recent times. Nimit.
Yeah, like you said, we're looking at a stake sale dilution of about 4 to 5%. Now, what this means is on April 27th, PSU said that they'd be pushing to, the government is going to be pushing the PSUs to sell about 10% stake each. Now, how this lines up is PSUs own about 31% of NSE. So just simple maths tells us that that will give them a dilution of about 3.1%. Now, how? Let's break this down. The largest shareholder, LIC, may sell about 5,300 crores, over 1% of NSE's equity. Stock Holding Corporation is going to sell about 2,200 crores, which is 0.44% of NSE's equity. The SBI Group, like you already said, 3,700 crores, 0.75%. And of course, PSU insurers together may sell 4,000 crores, which is another 0.8%. Now, this totals to about 3.1% at about 15,000 crores. What NSE has told, what is widely known in the news and in reports, is that NSE is looking at a valuation of an issue size of about 20,000 to 23,000 at 4 to 5%. Now, how it will get there is through the other institutional investors who are also looking to invest. This includes New India, GIC, Temasek, Chris Capital, all looking to put in some money, and NSE is going to look at about 5,000 to 7,500 crores from them to get to its 4 to 5 dilution mark at 23,000 crores.
All right, thanks Nimit for that. Now the government is looking to widen the support for industries impacted by the Middle East crisis under the Emergency Credit Line Guarantee Scheme, or ECLGS. Now speaking on this particular scheme, DFS Secretary M. Nagarju also said that most sectors affected by this ongoing tensions have been brought under its coverage, with only 8 sectors currently excluded. Listen in.
Most of the areas have been impacted, except certain areas like educational institutions, for example, defense, and tea. No, actually, the horticulture sector. Some of the sectors were there which were actually not impacted by the West Asia crisis, and therefore we have excluded them from the eligibility of the scheme. Okay, rest of the scheme is rest of the sectors are all available, and they can avail the benefit.
Right, and some important developments nationally. Vietnam President To Lam is in Mumbai on his 3-day India visit, and he said that Vietnam as well as India should build a long-term business partnership with focus on strengthening ties. He also further said that strategic combinations amongst the major powers are accelerating, with AI and semiconductors really opening new opportunities for cooperation. Tourism from India to Vietnam is also rising, and strategic combination amongst major powers is also taking place. All right, so that was the Vietnam president really talking about the India as well as with Vietnam trade. All right, let's take it straight across to the election update coming in and what's really taking place all across. Political activity is intensifying in Tamil Nadu as government formation discussions really gathered pace, and resort politics really makes a dramatic return in Indian politics. TVK leader Nirmal Kumar says that left parties, the VCK as well as IUML, have really sought more time to really respond to the party's request for support. And this comes even as leaders from the VCK and left parties met DMK chief MK Stalin and earlier today, and with sources indicating that the support proposal from TVK was discussed during this particular meeting. In fact, sources further suggest that Stalin told the alliance partners that they are free to take a call based on their own political interests. Meanwhile, also amid the uncertainty around the government formation, AIADMK MLAs are now being shifted to a resort in Pondicherry. My colleague Ritu is tracking all the developments from Puducherry, and let's take it across to her.
AIADMK MLAs are now moving to different resorts. Multiple resorts in Pondicherry are getting booked, and right now the NDTV is exclusively in the other resort where that set of MLAs are basically moving in with their luggage as well. So they will remain to stay in this particular resort in Pondicherry for next couple of days is what we are given to understand as well. So not in one resort but at the multiple resorts that the AIADMK MLAs will continue to stay. Now needs to be seen, the political drama is on and is only increasing here in the state. How is it really going to happen? Because the AIADMK has made it stand quite clear as well about not basically going in support of the TVK. They said they remain to be united. There's no fractionism within the party as well. So how this is really going to pan out in the coming days as well needs to be seen, because remember, in the Tamil Nadu, the government is yet to be formed as well. The TVK is continuing to seek the support as well for that magic number. So how is it all really going to work out for the TVK needs to be seen. But meanwhile, multiple resorts in Pondicherry are getting booked, and NDTV is exclusively right now in one of those resorts where that the MLAs have just walked in with their luggages and are staying here.
All right, political drama playing out in the state of Tamil Nadu, and the seat of power not as easy for Vijay at the moment. All right, with that, it's completely out of time on this edition of Profit 360, but keep it with NDTV Profit. Thank you so much for tuning in.
Ignition. Liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked. What's happening to my son?
What do your parents do?
In fact, I told them after resigning the job.
you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There be room for people in your space caps?
Aspiration is 5 years down the
Really?
line. So we want to make like space flight as easy as air flight.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presented by Canara Bank. Together we can.
Hello and welcome to KYC, and you are watching NDTV Profit with me, Sharad Dubey, where I get you the hottest companies in the KYC space. And today is also a very important large cap company. But before that, I would like to give you a hint. Try to guess it. It's very easy. The first hint is, of course, it's a Godrej Group FMCG company. You must be guessing the name by now, but there are other hints also for the uninitiated. Let's see what are the other hints. There's a mixed Q4 numbers which have been announced, but interestingly, from the March lows, the stock has gone up by almost 11%. That's the another hint I would like to give you. But overall, the company in focus, I'm sure you must have guessed it by now, but the company's name is Godrej Consumer. This is what I'm talking about, and we'll try to decode that and ask the management also about the earnings and the outlook going ahead as well. But what are the key questions to be asked from the management? That's something which we'll be focusing on. The first is the margin trajectory. There is a lot of concerns on higher costing coming in, so that margins might be impacted. That's the biggest question to be asked for GCPL. Also, the price hikes to be taken in FY27, what would be the number of it, and what's the pass-through mechanism? That's very much important to ask the company or any FMCG company, to be honest. Also, the third question was the recovery in the Indonesia business. There was a major overhang here, but does that change now, especially from the Q4 numbers? That's something to watch out for. Another important question would be the impact of harsh summer. What happens to the key product portfolios? Is it beneficial for someone, or is it having a negative impact? This is a very major question to be asked. And also the raw material pricing trends, because things are getting expensive. We can feel that. And so does the FMCG space also, be it essential oils or other key products, and the growth outlook, of course, for FY27 for GCPL. So these are the important questions we'll be asking the management. But what this company is all about, I'm sure a lot of you know about it, but let's do a revision and let's see if you know the entire story or not. The first thing is, of course, the Godrej Group's FMCG company of more than 120 years of history they already have. Now they manufacture and they market household and personal care products. That's something which you see in your everyday life as well. But let's look into the detail कि company में क्या-क्या actual products हैं. Let's see the household products which you have seen across. The Mortein brand is there, which is there in everyone's homes. That's something to watch out for. Insecticides, air care, fabric care, and now home hygiene setup is coming in. This is the household segment which I am talking about. Apart from that, there is a personal hygiene segment or the personal care segment. This is the personal wash and hygiene segment. There's a hair color segment, deodorant and fragrances also. Remember, there is an acquisition also which they had earlier done as well. So that's also included in this business, the Park Avenue acquisition I'm talking about. But apart from that, there is premium beauty, and the professional product is something which the company has its business from. Apart from this, let's look at the other key things to talk about the company, and they are present in more than 80 plus countries as per their annual report, and that list is expanding as India's FMCG story goes forward as well. Also, let's look at the coverage in the new launches segment, especially the pet care segment. Remember, this is the high-end, high-margin segment which is growing a lot in the Indian urban markets at least, and the brand is Godrej Ninja. That's what we are talking about. That's where the new launches is coming in the company. Apart from that, let's look at how the company is moving ahead, and the segmental revenue breakup is very much important. Roughly 62% of the revenue comes from the Indian segment which I'm talking about. After that, in balance, 14% each is coming in for the Indonesia and Africa, US markets. The other markets, that's at around 10%. The brokerage's view on Q4 is very much important because the Q4 numbers is something where the interest has come for the street. The standalone organic volume growth stood at roughly 7% on a year-on-year basis. Also, looking at the other key factors, the home care segment in India, they performed strongly. But the personal care segment, that is where a modest performance has been. And of course, we have talked about the margins pressure, which is expected to come in the first half of FY27. Overall, EBITDA grew quite strong at 18% in the Indian markets. Apart from this, also what the brokerages have spoken about is the overall international business, that on a CC, that means constant currency basis, has grown in a mid-single digit with a muted EBITDA growth. So that also needs to work, especially the Indonesian business. That is where the concern comes in, and the higher input cost is a concern in the upcoming quarters, and that is why we are seeing some kind of negative selling pressure in the company. Apart from that, outlook ahead is important, and this is what I mentioned. The Q1, Q2 is expected to have a higher top line growth, but the concern is not the top line growth. The concern is definitely the margins, the inflation cost which has gone up. That is where the important news flow is, and that is how you should be looking at this stock futuristically. Apart from these outlooks, the pricing pressure on the Indonesia, that's expected to bottom out, and of course some hints have started coming in this quarter as well. A warmer summer is expected to be negative for the insecticide business, but positive for the soap segment. So there are mixed trends coming in because of a longer summer. Also, the supply chain disruptions, they provide a competitive advantage to the company because there is a larger player, and that is where they might get benefited from consolidation, and that's where a little bit of alpha could be there. But let's look at the growth trend for the company for the next 5 years. They have updated that growth targets. The standalone business, this is roughly a 9% growth coming in, and not a very big number to be honest, but looking at Indonesia, that is coming out from a revival, so the number is on the lower side. USA, Mid East and Latin America, that's also at 5%, 9% growth coming in. So single digit growth mostly coming in most of the categories. So we need to be looking at how the company looks. But let's just see how we judge a company in KYC, and there are important rating parameters also, be it a mid cap, small cap, or today's case large cap. The rating parameters are largely the same. Income statement, balance sheet, cash flow is something which we look out for. Also the return ratios, especially the ROC numbers, that is where my interest lies. Apart from that, we have shareholding segment. Of course, the FIDI movement is something we'll track for Godrej Consumer and Street Cred, out how much returns have actually been made, kitna paisa actually bana. Valuations, we'll try to compare their peers in this segment, and lastly we'll take the analyst take of how much of them are bullish or having a sell, buy or a hold call. That's the entire takeaway coming in from the parameters. Let's talk about the first parameter. That's the income statement, and of course the revenue looks big, EBITDA looks big, but look at the CAGR growth which is coming in. This is just in single digit. That seems like the growth seems to have, of course a high base is there because the company's size is big, but nevertheless the growth numbers needs to come, and this is coming in for the larger players also. This is just not this company, other FMCG players as well. fourth quarter numbers, the revenue went up 11%, coming in at 3,900 crore rupees. And also looking at the key numbers, EBITDA saw an 11% jump, and now of course the street is concerned on the margin impact as well. It was flattish at around 21.6%, and the PAT numbers also, if you could just pull that out, that's around 10%. So yes, it is growing, but it's not growing very fast. That's a little bit of concern coming in, and because of that, and the numbers were also, you could say, mixed, and the street taking it in the negative side, I'm going to give this a 0 when it comes to the income statement. That means a thumbs down coming in. But let's talk about the balance sheet, how things have moved. And balance sheet largely, it's a debt-free company. That's why you can see a lot of numbers here, but the debt, it is 0. So cash bank balance is pretty much strong. It's a legacy company. It's coming in from a strong conglomerate. So the balance sheet management is top-notch. So there's no questions to be asked. So it's a strong thumbs up when it comes to the balance sheet segment. So we spoke about the income statement. We spoke about the balance sheet. Let's talk about the cash flow. In this kind of nature of a business, there is of course the general trade, there's an offline trade, at times the payment cycles also move around. And remember, there's a GST rate cut benefits also happened. And now slowly the FMCG back is seeing that growth in numbers. Why I'm talking about it? Because the cash flow from operations, that's around 2,070 odd crore rupees. That has actually increased, and it has come to almost 2,500 odd crore rupees. A slight dip coming in from the FY27 numbers. EBITDA also, we're seeing a decent up move coming in, but it's largely flattish. These are all the single digit growth numbers. But the way the cash flow management is happening, the way the working capital management is happening, that is where it's showing a good strength. So just compare in FY24 the cash flow operations to EBITDA, that stood at 70%. Now after that it's ranged 85%, and now it's around 80 odd percent. So at an average, if you take the conversion ratios in the working capital is really strong. The net cash flows also interestingly have maintained. There is of course lumpiness here. Remember in FY24 in the numbers there were some exceptional losses also, but net the cash flow is impressive, and most of the parameters which we tracked are doing well, and they are ticking the list of how we judge a company in KYC. So it's a strong thumbs up when it comes to the cash flow segment. Also, let's talk about the return ratios, how things pan out. And remember, these businesses which they are functioning in, they are moving towards the premiumization. A lot of acquisition is something which the management is quite bullish on. And look at the ROC numbers. That number in FY23 was 17%. ऐसे धंधे में आपको 15-16 मिलना बिल्कुल चाहिए, and the company is actually outperforming that as well. And now it's constantly holding that 19% mark. So the return ratio for GCPL, even if you compare it with the peers, is still on the stronger side. So net, it's a strong thumbs up when it comes to the return ratios. Also, let's talk about the shareholding, how things have moved. And remember, this is the portion to look at, where that is where there was an equity dilution event, and now it's at around 53%, but still the promoter stake is in the positive. FIs, let's look at how things have moved. Around 23% was there in March 2024, then it came down to 20%, and that sell-off continues, and now it's at 13%. That means 10% of the stake sell-off has happened in the last 2 years. But on the other hand, the story flips. If you talk about the DIs are having almost 9% stake in March 24, and they have been nibbling in the stock. Of course, at times people talk about the valuations higher for the FMCG space, and that's something we'll come back to. And that has doubled from 9% to 18%. So one side FIs are reducing, the other side DIs are taking up stake, and that is where it's kind of nullifying my analysis in the shareholding segment. Promoters are holding 53 and they haven't changed. That's a good sign after their equity dilution event. And the public stake, that is also slowly going up as well. So net it's a neutral rating when it comes to the overall shareholding segment. But most important thing is how much has the stock made you money for, and at times it tests a lot of patience. And let's just see how much patience has been tested for the long-term investors. And yes, it has been tested. Look at that, last 5 years there has been just 56% returns coming in. So your expectation should be on the higher side, and largely this has outperformed the Nifty also if you take the last 5 years numbers. Last 1 year stock is down 12% from 2025 highs. Stock is down 16%, but the dip which we saw in the March lows, from there the up move is definitely there. It's up 11%. So for long-term investors, the stock has tested a lot of patience, and remember, a little bit of dividend announcements here there are definitely there, but we have adjusted that to give you that perspective of how things have moved. But yes, investors do expect more in terms of returns from the company. It's a very stable bet, a stable FMCG company, and at times for flight to safety, this counter is very helpful for DIs as well as HNIs and retail as well. So net, it's a neutral rating. It's not been a big multi-bagger in the time frame which I have judged the company, but nevertheless, it's a neutral rating for the street cred. Let's talk about the valuations, how things matter here, and valuations are very much interesting. A lot of uniqueness is there in some FMCG companies. Some do have tobacco also. I have removed that company. But other companies, just look at the 12-month forward P ratio. Everyone is definitely concerned on the FMCG companies. Their valuations is a big question mark always. But nevertheless, there is a flight to safety, and at times they continue to manage that. That means India is a consumption rich and a good market to give these valuations. It's at 73 times for Nestle, it's on the higher side. And if you look at the company GCPL, their 12-month forward P ratio is coming at 44 times. It's largely neutral compared to its peers. On the cheaper companies, we have Colgate Palmolive, that's around 40 times, and Dabur, that's shade below 40 times, 39 odd times. If you could just show the valuation comparison for the first table, we'll understand the other companies also where the valuations are, and it's on the higher side. For Marico, it's at around 49 times. For Colgate, for HUL, it's at around 47 times, and around 44 times, which is at an even level, is GCPL, compared to the names which I had earlier spoken about. So net, the valuations, it's not that attractive in the entire FMCG pack, and neither for the company as well. So definitely the company needs to come up with some other valuation re-rating. If it can happen to the sector, that's something to watch out for. But net, peer comparison, I would still like to give this a neutral rating as well. Let's talk about the outlook, how much it's important, and instead of outlook, we are taking the analyst take. There are totally 38 analysts tracking the stock. 82% of them still have a buy rating. Almost 16% have hold, and 2% have just the sell rating. So net, the community is quite bullish on them. The 12-month target price is at 1230 rupees. And let's look at the return potential also, what stands here. And that's roughly from the current levels, almost 19% for the next 12 months. So you can say the analyst stake is very strong, and they have given a strong thumbs up when it comes to the company. But let's revise the overall ratings in KYC for GCPL. Where does the rating stand? And nevertheless, this company is already discovered, a lot of analysts are there, but we find, what alpha can be made from here. Income statement, the company needs to prove. Balance sheet, cash flow, that's rock solid. Return ratios is very strong, above that 15% mark which you look at. And looking at the street cred and shareholding also, let's see what rating parameters we have given. Till now, it's 3 thumbs up. Okay, there's one more thumbs up from the analyst side as well, which we had noticed in our analysis. But the shareholding portion, one side, we have DIs. They have been doubling their stake. On the other hand, they have FIs, which have been reducing the stake, But street cred, in the last 5 years, the stock has given almost 54% odd percent of returns. But the street wants more. Ye dil mange more. That's something to watch out for. And valuations, it's still a very expensive sector, to be honest. Let's give you the final ratings of our analysis of GCPL in KYC. And we have given the company 5.5 out of 8. It's largely in line with the average numbers which we generally give to a company in KYC. So this is the entire story for GCPL. And to get in a lot of perspective on the Q4 numbers and outlook, we'll be joined in by Mahima Vachrajani, my colleague, and she will be asking the important questions to company CFO Asif Malbari about the growth prospects and the Q4 numbers.
Asif, always a pleasure speaking to you. My first question to you is with regards to margins. I'm sure that you got a lot of questions around this in your investor call as well. But trying to understand that you have said that because of this West Asia conflict, there is inflationary pressure on raw materials, and that could put pressure on the margins going forward in FY27. Considering that you've already taken calibrated price hikes, you would probably take price hikes in Q1. How are you seeing that trajectory of margins? Let's say, do you think second half of FY27 is when you come back to your normative range?
No, so I think firstly, the way we closed last year and what we deliver in quarter 3 and quarter 4, we're actually entering FY27 from a position of strength. We had a good set of numbers coming out in Q4. Double-digit top-line growth, 11% revenue, backed with a strong volume growth. India volumes at an 8%, and delivering a strong double-digit EBITDA and PAT. So with margins being kind of coming back in second half. So we're entering FY27 with a position of strength. When it comes to the volatility in commodity, this kind of volatility is something which we've seen in the past. And I think our action, our strategy has been to first try to kind of mitigate as much of the commodity increases with cost reductions, which we have done, and then take calibrated price increases. We've already triggered on price increases across the portfolio.
Yeah.
Hence, from an annualized basis, we do not kind of see a worry in terms of delivering a medium-term kind of guidance in terms of top line and profit growth. There can be some bit of movement in terms of margin within quarters, but that's something which is something not really worrisome as far as.
Understood. Asif, can you help me understand as to what's the quantum of raw material inflation in the past quarter that you've seen, which is carried forward in May also in terms of percentage, and that versus the percentage of price hikes that you've taken?
So broadly, give or take, we've kind of been impacted by around 6-7% in terms of inflation. We have taken broadly around 4-5% price increases. We've kind of tried to kind of optimize some of the cost. So we have broadly kind of been able to offset this increases. We would believe that across the portfolio, more or less the pricing has been taken. There could be certain further price increases in detergents and soaps once this current round of pricing stabilizes. So we'll see how this pans out. But yeah, at these level of commodity prices, we are not really worried in terms of the profit profile of the company.
And what could be that percentage of price hikes that you would take going forward? Any particular range in mind?
We'll have to see how long the kind of conflicts last, where do commodities stay. So very difficult to give out an exact number. But as I said, the large chunk of the price increases have been taken. But yeah, in these two categories, in soaps and detergents, there could be some more price increase depending on how commodities pan out. We'll have to just take it in a few months.
Fair. Okay. As if the other aspect is that the common commentary from all the FMCG companies across board has been that no matter what happens, volume growth is going to be the strategy going forward. Is that the strategy that you are also adopting? This quarter also the volume growth has been, on a good footing. Do you think there could be a further upside from here on? Maybe a double digits by the end of the FY27 is something we can expect, early double digits, if not, more than that.
No, so as a company, it has, for the last 2 years, we've always spoken about stepping up the underlying volume growth, driven by a strong underlying volume growth step up in India, and we have been on the trajectory. A lot of effort has gone in terms of building new categories, and that have kind of added onto this journey. So our strategy clearly remains on stepping up volume growth further. Our North Star is about getting into double-digit volume growth. And I think we are kind of slowly improving on this trajectory if you see the track record. So that remains something which we are kind of obsessed about. And along with that, we want to kind of ensure that revenue and profits also fall in place.
For GCPL, harsh summers and weaker monsoons has both effects, right? It's good and bad both, because your home insecticides will perform well, soaps could be under pressure, etc. How are you viewing that play out? Because we are expecting an El Nino effect, and that could possibly lead to harsh summers and weaker monsoons.
No, so we to that extent we have the advantage of offsetting happening within our categories, and some of these weather trends do kind of change as we get more closer to the months. So we are not significantly worried in terms of how this could play out. We have seen historically also when there have been El Nino, we've not had severe impact in terms of the business, and we have multiple levers of growth which have been kind of action over the last few quarters. So we remain quite bullish in terms of where we should be able to take the business to an FY27, even if it's an El Nino year.
Okay, as if home care growth has always, been the outperformer. In the last couple of quarters also we have seen that. From a slightly long-term perspective, 3 to 5 years, how do you, see the mix panning out in terms of home care and personal care?
No, so we've again had a great quarter in terms of home care. Both parts of home care have done extremely well for us. Household insecticide business, after the relaunches which we did with a superior product and a new molecule, and the launch of Agarbatti has extremely performed well. And when it comes to liquid detergents, again, that's had a very, very good run. Fab is kind of looking at one of the real success stories from GCPL perspective, and we're seeing sequential growth of this across the nation. It started off with a journey in South, now it's kind of really expanded its footprint quite well. So we're quite happy with the way home care is kind of shaping up. When it comes to personal care, there has been a bit of volatility because of commodity prices in the soaps business. On an annualized basis, we're quite happy with the gains which we made on hair color. We made strong penetration gains, and we actually kind of delivered good growth on an annualized basis. There is sometimes some volatility which happens on a quarter to quarter. But we do see the larger skin cleansing business actually kind of perform quite well in the medium to long term. There is still a huge opportunity to kind of upgrade into face wash, body wash, and hand wash. And we have strong brands now in all these three segments. So we do see a good outlook both on home care and personal care.
As if your Indonesia business, you've said that FY27 is where, it'll, bounce back from where it stands right now, right? This quarter also we've seen some recovery happening, and last quarters also we've seen gradual improvement. Just want to get a sense in terms of what are the concrete indicators that you think will bring back Indonesia in a big way, considering how your other international geographies are doing, and what is the kind of growth that you're expecting from that business?
So I think we're quite happy with the way the Indonesia business now has stabilized over the last 2 quarters. Growth is stabilizing at mid-single digit, and the pricing pressures are now kind of broadly out. So next year we do see getting some bit of a revenue kind of improvement happening, and we should start going towards higher revenues from what we've kind of seen, and profit growth also should be back in the business next year. So that's really in terms of Indonesia. When it comes to our GOM business, which is Africa, US, and Middle East, we've had a very, very strong run, profit deliveries over the last 10 quarters, and we've had strong growth over the last 5 quarters. A lot of work has happened in terms of fixing the business, and we do see the momentum of the business continue in terms of double-digit growth, both on top line and on bottom line going into FY27.
Okay. Can you give me some perspective on your recent acquisitions as to how the growth has been like for something like a Mostak?
Yeah. So it's been too early, but we're actually quite happy with the way things have spanned out in the last few months, and we are very bullish in terms of what the brand potential is in the next few years. So actually quite happy with how things have spanned out in early days.
Just one last question, Asif, from my end is with regards to advertisement spends, because it's a mixed bag when it comes to a lot of these FMCG companies, right? A lot of there's aggressive approach where companies are going ahead and investing a large chunk in advertisement, and that's bringing them volume growth, while some companies are taking a conservative approach. What is it that you are doing in FY27 when it comes to advertisement costs?
No, so I think when it comes to advertising costs, we have always been spending at the right level of spends depending on what is the need of the hour. So depending on the requirement basis, launches, innovations, and expansions, we have always invested into advertising. And at the same time, we do ensure that we kind of get more and more effective in the quantum of spends. So the idea is to kind of enhance reach at the best possible cost. And we will play this double lever even as we enter into FY27 to ensure that our costs are kind of optimized while we get into higher and higher reach.
All right, just one last quick one as well. In terms of acquisitions, do you think more acquisitions could be a possibility on the cards if you find them attractive, especially in the digital space?
So we will be open to acquisitions. We always have been, and we will remain open, provided we find the right fitment. and the right strategic fitment. Yeah.
Three, two, one, zero. Ignition. Liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together. So we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked. What's happening to my son?
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There be room for people in your space cabs?
Aspiration is 5 years down the line. So we want to make space flight as easy as air flight.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome. You're watching Your Money Matters here at NDTV Profit. I'm Mahima Vachrajani, and today we're going to talk about two very interesting topics. One of them is very close to my heart. That is AI. How AI is shaping our personal finance decisions, and how things have changed now with AI coming into the landscape, right? And the second topic that we're going to talk about is how you should manage your monies in your 20s. What are the biggest mistakes, money mistakes at least, that you make in your 20s, and how can you avoid them? Okay, so first of all, we're going to talk about AI and how AI can be used in personal finance. And to take this conversation ahead, we're joined by Harshvardhan Rungta of Rungta Securities, who's joining us now. Harshvardhan, always a pleasure speaking to you. I was just wondering as to what extent we can use AI to personal finance, and I thought that why not have a conversation around this, because anything, and for everything and anything today we are using AI, right? It's both a boon and bane. To some extent, it could be a boon for personal finance as well. So according to you, how is AI changing the way people kind of manage their money?
Hi, Mahima. It's always a pleasure to be on your show. Well, it's a very important topic that you brought up today, because we see the influx of AI in every field that we are associated with. So if I want to plan a holiday, if I want to just research about certain stocks, I want to collate data, we're all very heavily relying on AI, and rightly so, because the speed at which we get the information, or possibly the accuracy of the information, collating everything together, it's like a person speaking with you over the screen. So it just becomes very, very convenient for us to get engaged with AI to use AI for our daily purposes. Now, Mahima, what you brought up is how AI should be used for personal finance. Now, there is where you need to be very clear as to what I need to use AI for. So if you ask me, Now, AI is an excellent tool for research, which means that in case of mutual funds, say for example, you may want to feed in certain inputs and ask for an output which relates to how is a particular scheme performing, what are the ratios and the matrix of this particular scheme. Now that data, I believe, will come out very well with AI. Now the problem is, and the mistake that we make, we are trying to ask AI to suggest a model portfolio for ourselves. I think there is where you will possibly find some limitations, and there is where I believe that personalization, that judgment call, the behavioral aspect of an investor is not going to be correctly captured, and there is where there would be some kind of a gap. So use AI where it can help you, which is research, and for all the qualitative aspects, your behavioral aspects, I think a human intervention would be required.
All right. So for analysis, you can go ahead for AI, but I think for suggestions, you shouldn't. Is that understanding correct?
Yes, so I'll elaborate this with another example.
Yeah.
Now, if you want to plan a holiday, okay, so what do? You first draw up an itinerary that you can possibly put in saying that, you can give the inputs to AI the way that you want to customize your plan. You put those inputs to say that I want to plan a holiday to a next country or a next place for so many days. What is the ideal situation? So that, you will get one bit of an itinerary for yourself. Now, if you want to, of course, have some time constraints or some level, some flexibilities you want to keep. Now, those changes will need, the best way to get that is to probably speak to a friend who's been to that country, ask them what is it that they'll prefer doing, and customize it based on real life experiences from human beings. Now, what happens with AI is that whatever, it's an algorithm, it's a machine, right? So what happens with AI, whatever is the data that algorithm is processing, they will come out with an output basis on that. So, and where is AI pulling the data from? From the entire universe of the internet. They're trying to collate data in a very quick manner with whatever is available in public domain, put it together and bring it to you. Now that, is a good way to collect. As I said, you can do good research using AI, but can you use that to make recommendations and make investments based on AI suggestions? I think that would be something that you need to be very careful about.
All right. Okay. The other aspect is, do you think, Harshvardhan, that there are any trends that are shaping up because of AI coming into picture that you think could be relevant for our viewers, probably could help them in any way in planning their personal finance by any chance?
Well, Mahima, this is interesting. You know why? Because every time there is a technology, revolution, there is going to be some bit of expansion in the market. Now, take for example, when computers were introduced, many people felt that their jobs would be at risk. I mean, computers would do what 10 people can do. One single computer can do what 10 people would do. So people would lose their jobs. They would not have anything to do. Now, that's not true, right? Because after computers were introduced, the scale of work has increased. The proficiencies have gone up. Now, similarly, AI coming into picture, there would be certain challenges that AI would bring, and at the same time, there would be certain benefits AI would bring. So what I would say, as you asked, is what are the benefits or what is how is the ecosystem changed? So, well, the access to information has become very efficient, very swift. I mean, if at all anybody wants any information at probably 2 in the night, you simply pick up your phone, try and get answers to your curiosity and your answer and the queries that are running in your head at any point in time. Now, this has enabled the access of information really quick, and at least you get the basic answers to your questions. Then what happens is you have to refine this further with human intervention. Now, there is where you can always, in this example, wait for the next morning, talk to your advisor, etc. So the landscape is changing. It is expanding the market, where people sitting in the remotest of villages would have access to a mobile and internet, and then you could do basic research and at least start moving into the direction that you're thinking to do. So I think any technological development or disruptions only expands the market, brings in new people into the fold, makes it cost effective for people to adopt to different technologies that they have or they want information to. It just becomes easier and convenient for them.
Okay, understood. From a younger investor point of view, like I said, it can be both boon and bane. We've talked about how it can be utilized in a positive way, but what are some, negative aspects that one should keep in mind before using AI for your money, at least?
So, Mahima, the biggest problem is over-reliance. I mean, you would see that people are now getting so hooked on to AI and believe that the machine-generated replies or suggestions are better than that given by human beings. So I think that is the biggest concern that somebody would need to be very careful about, because it's a very easy medium. All that was required to be done through hard work in the past, where physical research, etc., you have to collect information from different places together. Now that has become at a click of a button. In few seconds, you're getting the same information which otherwise would require a lot of research and hard work. So it's become a very convenient tool. It's a lazy man's effort to put, say, simply just put everything in AI and get answers immediately. So I believe there is a situation where we are being over reliant on the convenience that AI offers to us, and we've stopped using our own brains. I mean, we don't want to put hard work in getting information, bits and pieces of information from different places, and put it together to use it for our judgment. I think it's just the over-reliance, the over-convenience that it offers, that we just become very lazy and we don't want to do the hard work now. So I think there is where some effort and some restraint will need to be applied from the younger generation, particularly, who've seen everything very easy and convenient. When everything comes in just at a click of a button to them, they don't move out of their houses and get food right into their house. They get everything home delivered, where that's not the situation that was probably 1 decade ago.
Yeah.
So you just have to be a little careful about the over-convenience and over-reliance that AI offers.
Yeah, absolutely. Harshan, that's correct. The other aspect is with regards to the AI model versions that a lot of these apps use. For example, Grow has its own AI version platform. A lot of other apps there are apps available that probably suggest stocks or suggest mutual funds, etc. I just want to understand, even for credit cards as well, there are apps that suggest good credit cards as per your requirement. How much can you rely on them in terms of, because we did discuss, right? Suggestions is something that one should be wary of, but at the same time, these models are built to suggest something to you. So how does one determine whether we should rely on these AI apps or not?
Now, what AI should do and should be used for is you research on a stock. You say, give me information on this particular stock or give me information on this particular mutual fund scheme. Whether to invest in that scheme based on the information that has been given to you should be your own discretion. Do not ask AI to tell you which stock to buy. I don't think AI is qualified, licensed in that context to give you stock recommendations. Nor is it, because it is only going to process the data which is already in public domain, and it is going to remove and collate and average out that and give it to you. I don't think that is the way, advisory business or you should, as an investor, construct your portfolio. So again, now when there are machines and there are some private parties on the other end, which means there are businesses which are offering robo-advisory, they can most certainly configure the algos in such a way that they nudge an investor to invest in something or pick something that is probably what they want you to do. Right? So there's always going to be some kind of a backend. As I said, because what is AI doing? It is only collating information and giving it to you. Now, if I can just modify that algo, and simply say that, okay, these are my schemes which should be probably pushed, then I would configure the entire robo-advisory in such a way that these schemes turn out in the recommendation of whatever input that you give.
Understood. Okay. Just one last question from my end. This probably is just the beginning, right? It's going to be more advanced from here on. So 5 years down the line, let's say by 2030, what do you think will personal finance look like considering AI into picture? What are the changes that you would be expecting that will happen?
So, well, in terms of reach, because of the fintech, because of these platforms, because of digitalization, I believe the penetration would be really, really good. We'll go down into the smallest of villages in the country, where thanks to these fintechs, access to advice, which was difficult otherwise for somebody sitting in a remote place, can now at least get onto the mutual fund platform, invest or trade in stocks. Sitting right into their village in their house, probably all they need is a mobile and internet. So the reach is going to be, and the penetration is going to go up, which is very good. With regards to advisory side, I think the quality of advice will improve because the research data will be better. Thanks to AI, AI will give us very, very good data points. And we have advisors who will be able to analyze their data in a better format. and possibly give you better outcomes. So I think with regards to advisory, the quality of advice is going to go up because the data points, the research reports are going to be much better than what used to be earlier, possibly. And the advisory business is going to be hybrid, where the system AI is going to be used for research and analysis done by humans. So I think that kind of a combined hybrid model, along with the penetration and the convenience and the access to investing, the universe of investing, I think we are into good times. And the penetration, a retail investor wanting to invest even 100 rupees will have access to doing that because of the reach of technology. Even if he or she does not have access to good advice, at least they'll have the systems that will enable them to start investing, which is very good.
All right. Okay, Harshvardhan, thank you so much for taking out the time and helping us, understand the AI side of personal finance. So like, Harshvardhan was mentioning, it's both, in fact, boon or bane. But, one has to choose wisely in the direction of, making it the boon way. So that's, of course, the first topic that we talked about with regards to AI in personal finance.
Ignition. Liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just, quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So I was really inspired by him.
How did your family and your ecosystem...
All right, so the second topic that we're going to touch upon today is the big money mistakes that you could make in your 20s, and we'll help you avoid them. So that's the topic that we've decided to kind of touch upon in this edition of Your Money Matters. And to take this conversation ahead, we're joined by Nasir Salim, who's the managing partner at Flexi Capital, joining us now. Nasir, thank you so much for taking out the time. My first question to you is for somebody who's just entered their 20s. We've kept on saying this thing, right? That the earlier you start investing, it is better. But I think nobody talks about the mistakes they make while investing. So I think it's important to talk about that as well. So my first question to you is that what is the one or two single biggest mistakes that, generally people in their 20s make that they should certainly avoid?
Raymond, thank you very much, firstly, for having me over. It's always a pleasure to be, appearing on NDTV Profit. Okay, so, a very interesting question, Mahima. I think the timing is perfect, couldn't be better. I think one of the biggest single financial mistakes people make in their early 20s, and I can tell you, being, in the wealth management business for the last 24 years, I also was part of that mistake. So I can tell you not only from experience, but also from practice, that, we delay the basics, Mahima. I think delaying the basics, especially investing and protecting themselves, is one of the biggest issues. People think when they're young, especially in their 20s, they'll start later when income grows. But in finance, Mahima, delay is very, very expensive because compounding works against you. So the more you delay, very simply put, you're missing out on the factor of compounding. And that is the eighth wonder of the world, as a lot of people say. At least for us, it's the first wonder of the world as far as personal finance is concerned, right? So I think the biggest mistake is not losing money, but losing time. I think that's the one very, very important, important point that I would want to at least say when you look at the biggest financial mistake people make in their 20s.
Understood. Okay, the other aspect is lifestyle inflation, right? All of these Gen Zs, millennials, for them it's becoming a big problem. Considering that, plus considering what you said right now, that, start as early as possible in terms of investing, How should they kind of balance both of them, and what would your advice be to that generation?
So, clearly, Mahima, in that Gen Z segment in millennials, very rightly said by you, lifestyle inflation is a bigger problem, right? And then competing with the Joneses, like, if somebody else has bought an expensive car, you may not have the funds, but you definitely want to go and, look at purchasing that. And maybe, you may not be able to afford it. So I think, lifestyle inflation is absolutely accelerating, clearly. And I think with rising incomes, expenses are even rising faster, right? Driven by lifestyle, social media, peer pressure. And one very important thing, Mahima, and this is easy credit, right? And that is something which is kind of, creating a lot of problems for the Gen Z and the millennials, at least that we see when we look at the entire dashboard. Now, the point is with income increasing, doesn't necessarily mean that wealth is not increasing. Income is increasing, but wealth may not increase, right? And that's a very, very key distinction. So I think, you have to look at very basics in place. And that we can discuss, along on your show to say that, what do we do? How does one start realistic investing? And how soon can they start? And there are many ways to kind of achieve that. Avoid, FOMO, to avoid chasing lifestyle inflation, peer pressure. And as I said to you, the most important single factor, easy credit and something which is new. It's a new acronym, I must tell you, Mahima, which is very popular with the Gen Z and millennials, BNPL. Buy now, pay later.
Yeah.
So again, big challenge there. So that's my point.
Yeah, absolutely. You're right. And why don't you touch upon, about what you were saying as to how should one, manage both of these?
So two things, very crisp 2 points, Mahima. One, as soon as your first salary or consultancy fees or income comes in, even if it's a small amount of money, Mahima, we've been told always to stick to a discipline, right?
Yeah.
And you can do that through a very good platform. Way back when our parents were around, were in their, when they were working and they were younger, they didn't have so many options such as those which are available today to participate in capital markets.
Correct.
Just yesterday, on the 4th of May, Mahima, NSE has launched something called EGRs, electronic.
Yes.
You can invest as small as 1 gram, equivalent, which is backed by SEBI vaults. So again, the point I'm alluding to is SIP is a very common, discussion that we've had multiple times on platforms. But look, even those today, even the regulator is pushing, the ones who manufacture these products in the financial ecosystem to come up with innovative ideas. EGRs is one example of those. SIPs could be another one, which are designed to allow even small monthly investments and build discipline over time. So that's very, very important. So don't wait to invest. First salary comes in, invest while you wait to earn more. That is the challenge. The other quick one, of course, is, that you need to create buckets. So there could be one lifestyle bucket. Look, I'm not saying don't do lifestyle expenses, inflation, but keep those buckets in place.
Correct.
Start small with discipline and create buckets. So you could have an SIP bucket from your first income. You could also have a lifestyle inflation bucket from your income that you draw. And when you create these two buckets, then is when, and the more important point is once you create those buckets, stick to a discipline.
Yes.
And more importantly, also create segregated bank accounts if you can.
Exactly.
So an SIP can go, or your short-term, your small units of investments can go from a separate bank account. Your regular expenses, inflation expenses, lifestyle expenses can go from a separate bank pool account. And if you start all of this earlier, the better it is from a discipline perspective.
Absolutely. I was thinking of adding that point as to how important that segregation of bank accounts is, right? So that you just don't touch one bank account, just keep it for your investments and don't touch it at all when it comes to, making your expenses. So valid points there. But the other aspect, you talked about buy now, pay later. That's definitely a big red flag. The other one is credit card spending as well, because credit cards have become so easily accessible to, kids these days. My understanding is that it's a very good, way to kind of delay your payment, but it has to be used very judiciously, right? So what are the, things that, these young generation people need to keep in mind when it comes to using credit cards and not maxing out them?
Fair point. Very, very important. Again, Mahima. I think so. First thing, foremost, to tell you as a banker, I can tell you, former banker, credit cards is not bad news. It's good news.
Yeah, absolutely. Yeah.
If you use it responsibly, it's a great product to have in your pocket. But I use the word responsibly. Now, the thing is that the question is, can credit cards help young professionals build wealth or destroy it? I mean, that is the point, right? They can do both, Mahima, in our point of view. If used properly, it helps you to build a credit score, which in turn also tells you to talk to your bankers at a future date to say that, listen, you may be ready for a home loan after 5 years or 7 years. You have a credible credit score, which is available through CIBIL scores very popularly, as we all know, which is the Credit Information Bureau of India Limited. So when you start using, so my advice to young professionals is that don't run away from credit cards. Get it, build a good credit score, use it responsibly, use properly. That's number one. Number two, if you misuse it, it leads to high interest debt. Now, typically an interest rate on a credit card that you swipe today, you end up, and if you don't pay the full amounts, right, you end up paying huge interest costs. It's as high as 3.5% to 4% per month, right? So it can actually go up to 45% to 50% in some cases. So the point is that you actually, by swiping the card easily and not being able to afford to pay the full amount dues, will actually eventually end up harming you. It may sound all very convenient and cool. You may go to a nice restaurant. If I can say this on your show, may impress upon somebody you're trying to meet as a fresh friend, that you're trying to tell them, listen, I've got a lot of money. I take out my card, swipe it around. But you should remember that if you can swipe the card, the expenses that you do, you should be able to pay off the entire amount within that due date, which is usually ranges between 14 days to 21 days, usually. That is given by most credit card companies.
Right.
And data shows, Mahima, the otherwise, data shows that rising credit defaults among young millennials due to EMIs and BNPL usage is becoming a big challenge for banks. I must tell you. There is credible data available, and when you look at the overall dashboard, Mahima, it shows young millennials. So my recommendation to them from your platform is, please don't do that. Credit cards, Mahima, reward discipline and punish indiscipline. So that is the point.
Absolutely. Very well put, Nasir. Very well put. So that's, something that you need to keep in mind when you're using your credit cards. But Nasir, just one last, leg of this conversation. I'd like to do a rapid fire with you. Just 4 to 5 questions where you can, make your answers crisp. Are you ready for that?
Absolutely, Mahima. Always ready.
All right. So the first question is, one money habit every 22-year-old should start today.
Start now, don't delay.
Okay.
And don't overspend.
All right. One financial product young people should avoid badly, should not get into it at all.
BNPL, buy now, pay later, should be avoided.
Okay. And what's the one thing you wish you knew about money in your 20s?
Opportunity to start with SIPs.
Okay.
Start small, start with discipline.
Interesting. And one last one, if someone is financially lost probably at 25, where should they begin?
Start reading books on personal finance and consult a certified SEBI AMFI certified advisor or NRIA.
All right, Nasir, thank you so much for that. And thank you so much for helping us, answer all those questions. I'm sure everybody who's, in that category of 20 to 28 or 30 is going to appreciate this conversation. Thank you so much for taking out the time.
Thank you. It's always a pleasure, Mahima. Thank you very much.
All right. With that, viewers, we're completely out of time on this edition of Your Money Matters. But do stay tuned. More news and updates on the other side.
Ignition. Liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together. So we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So I was really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked, what's happening to my son.
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There'll be room for people in your space cabs?
Aspiration is, 5 years down the line. So we want to make space flight as easy as air flight.
Hi, I'm Tamanna Inamdar. Watch me on NDTV.
Presented by Canara Bank. Together we can.
Kishore Patil, MD and CEO at KPIT Tech, joins in. Kishore, welcome to the show. Always a pleasure to speak to you. My question coming to you is, you've ended FY 26, I beg your pardon, with an EBITDA margin of what? 20.8%, missing that 21% margin guidance. I know it's a marginal miss, if we can say that. What have been the specific headwinds in the fourth quarter that has led to the slippage? And were there any one-off costs or any structural shifts that you saw?
The first thing is, I think during this quarter, we have been talking about investing into multiple areas. And one of the areas which we have been investing into is AI, and some of the R&D investments we wanted to scale up. I think our R&D investments from about 3%, we have scaled up to about 5 to 6%, depending upon that. That is one reason why it has, to some extent, been in the range, but a little bit less from that perspective. The second thing I would say that the acquisition expenses have also hit to a certain extent in between. So with these two, actually, it is in that range. I think it's something which we have talked about last quarter. Similarly, it is in the range what we talked about last quarter.
Okay. So let's look at FY 27 then, because the guidance of 20.5% to 21.2% is slightly lower if I have to look at the bottom end than the previous expectations as well. Does this range actually account for further integration costs of Simotive, or is it higher than expected R&D for AI?
There are two reasons for this. First is the currency movements have been really very unpredictable in the recently. I think if you really look at it, has really a significant impact on EBITDA as well as profit. So we don't know how the currency movements will happen. We can talk about constant currency. It's more complex than that because there are multiple currencies come in as we are well spread across the 3 geographies. That is one point. The second is we will continue to invest into this, and basically we say that it could be more than 21.2% also. So it really depends upon how the things scale up. So I think at the end of the year we are pretty confident it could be higher on the basis of higher revenues and etc. That's what we feel. Also, in the medium term, we believe that profitability will be much higher than this.
Okay, so going ahead, profitability is going to be the key from here on. Now, if you have to look at the 2 major SDV programs, they also end in the first half of FY27, Kishore. And this probably there could be a significant revenue hole that the company will have to plug on the back of this. So if you could help us understand what's the kind of revenue contribution that these 2 programs have had in the 4th quarter, and do you have enough shelf-ready projects in account to ensure that the sequential growth does not dip in the first half?
So there are, I can only answer in 2 ways. One is we have given one statement which says that had it not happened on this side, we would have grown 4 to 5% every quarter on quarter next year. So it shows it's a significant part. At the same time, you can see that the wins for us in terms of 349 million, again, one of the strongest quarter in terms of deal wins recently, as well as a couple of large engagements we announced. And of course, the discussions we are having across, I think that gives us the confidence that it will substantially, make up for these. So of course, we are saying that we will grow. How it will pan out every quarter, how actually some of these deals will, impact us as well. Some of these are the basically depends upon the actual modalities of every project. So that's why it cannot be 100% set. That's why we have said that the first half may be softer, and at the same time we are saying that we have been in a position to make up for this. So otherwise the growth would have been 4 to 5% this year. So it means that the wins in the other part of the business they are strong.
Got it. So if you have to look at it from a business perspective, Kishore, with the pivot that's happening, from a linear service model to a 50% non-linear solution model is what we are seeing, right? So is there any cannibalization happening when it comes to traditional services for AI-infused solutions? And if so, the kind of impact you could see when it comes to your revenues per employee or even the long-term contract pricing?
So 2, 3 things I would say that the first thing is our revenues per person have increased consistently over last 4 years, and we expect it to continue to increase in next few years as well. So revenue per employee will keep on going. So I think that that will be there. We actually believe that the overall pivot we are having in terms of solutions and product actually will be it will be accretive in terms of margins. And as the share of products and solutions will increase in the overall business, the margins will improve. Actually, that is one of our major levers. And from that perspective, one of the thing in terms of solution is you take the ownership. So actually you expand the scope. And even in case of the AI world, there is a lot of integration requirements and possibility. Specifically in case of our area, AR&D, there is much more deeper engagement required as an integrator, because you have solutions, you have products, but you also need what you call a deterministic output, which cannot come out of model. There is an infrastructure requirements and the whole integration of the whole system to ensure output. So I think that that's why we see a relatively less impact in our vertical.
So, Kishore, an interesting point that you made about AI as well. Let me pivot to the acquisition that you've made, which is Cymotive, if I'm pronouncing it correctly. Why is Cymotive chosen specifically when it comes to the AI-led cybersecurity strategy over developing these capabilities in-house? Because your R&D spends are also usually on the higher side. So why this one, number one? And two, the specific revenue or EBIT hurdles that the company will have to actually clear to hit that upper end of the valuation in terms of the acquisition, and what's the impact you're seeing when it comes to the EPS over the next 2 years?
You have asked multiple questions, so I will start from one by one. First, it will have no impact on EPS for next few years. Actually, it may just improve some revenues, but we don't see any impact because the way we structure the deal, till they hit certain milestones, we don't consolidate it, but we will still get some benefit in terms of what KPIT as an independent entity would deliver. So I think from that perspective, it has no impact in the next 2 years. Basically Cymotive, one of our key customers and and CARIAD, which is the software arm of Volkswagen Group, is a important stakeholder, and the ability of Cymotive to really include their solutions in millions of vehicles there is the really critical thing for us. And the reason we are saying is in the world of AI cybersecurity becomes more important, as well as what KPIT builds the solutions, cybersecurity will become more important. Overall, if you look at the software-defined vehicle concept, now it is becoming more AI-defined vehicles. So having this kind of a cybersecurity expertise across the value chain, across the V cycle will be very important. I think that's what we are looking for, providing these solutions to our client.
Okay. And overall, if you have to look at the growth that is coming in specifically from commercial, which is the on and off highway segments, was the growth in the fourth quarter also driven by this segment? And how are you seeing the passenger vehicle segment, develop from here on? Because there is commentary saying that there is a prolonged slowdown that is probably on the cards.
So there are 2-3 things I would like to say. I believe passenger car segment, the overall spend will increase. It could be specific to a certain OEM for a certain time. But if you take a medium term, it is the overall increase is a clear trend. And the only thing is there is a shift in the spend. What I mean is, I think many people think that by reduction in reduction spend, which is also not true, but in certain parts of the world, reduction in the spend of electrification will mean that overall spend will go down. That is not the fact. Actually, the spend is increasing multiple areas, but to name 2 most prominent is autonomy, and the second is the digital cockpit. So these are the areas. So the spend areas are a bit shifting, I think, and we see those trend. And if you look at some of our wins, which we have talked about, one of that is the digital cockpit and the experience part.
Pavitra, thank you for your time and sitting down with us on your results. I think if I look at your pre-sales Q4, they look pretty robust, but on an annual basis, it's underperforming versus what analysts were penciling in and some of your guidance as well. How do you see the entire picture?
Thanks for having me. Yes, we did manage to get a good Q4 in. We launched 4 million square feet. On the residential side, we sold around 2,500 crores of pre-sales, which equated to just about 2 million square feet. But yes, for the full year picture, we did see that we weren't able to get to where we would have liked to be. A lot of that was due to our launches getting back-ended. Some of the approvals did not come into the financial year as we would would have wanted it to happen. We did manage to salvage a couple of those launches though, and that reflected in Q4, whereas the first 3 quarters we didn't have much of launch activity at all. That said, our sustenance sales did do well, and which is why the overall year is still, looking quite okay, considering that the last few years, at least 40% of our numbers has come from new launches. This year, that contribution was less, but the overall, contribution from sustenance was good. So I think in terms of on-ground demand, things are still looking all right. And, we are positive about the launches that we have upcoming as well. We do expect some of those launches that are coming into H1, to do well. But even in the upcoming financial year, we have some dependency on, new launches coming in to the pipeline.
You've actually, Ms. Shankar, hit on exactly what I wanted to ask, because I'm assuming from what you've said that the margin squeeze, the net profit drop is all because of the delay in these launches and the permissions which come in. Isn't that a problem that can persist?
So a couple of things there. The margins that you're talking about are actually reflecting revenues and which happen at the time of registration and project handover. Okay. So it's not related to the pre-sales numbers. The pre-sales are more of a leading indicator, what we might expect to happen over the next, few years after construction has happened. But on the margin side, it's really the projects that are getting registered and handed over today. Those were those were sold at slightly lower rates than what we have today in terms of an APR. So the margins for those projects are a little bit lower, and that's what we are seeing today. But on the pre-sale side, a lot of these projects, or most of these projects, are happening at much higher rates than we sold, say, 4 years ago. So in future, our margin outlook is much better than what you're seeing on ground today.
Pavitra, Neeraj here.
Hi, Neeraj.
You are visibly trying to change the, the texture of your company from being a real estate or a flat selling company, if you will, if I can usually put it, to having multiple streams. Is this diversification a strategy to effectively counterbalance a slowdown in one of the segments with the other? And how does it start looking, let's say, 12 months or 24 months out, the different segments in percentage terms, if you will?
Actually, Neeraj, we've been a diversified company from a domains business, like from a residential, yes, office, retail, hospitality perspective. I think for our last 40 years, this is our 40th year. The last 5 to 6 years have seen a dramatic ramp up on the residential side, and naturally that is because of all the opportunities that were there for that on the residential side. We are entering into a capex cycle on hospitality and commercial. So yes, in the next few years, you will see a lot more contribution from, from a value perspective on both the hospitality and the office side of the business. Residential will also increase, but all these 3 different segments have their own market cycles. I think real estate or the residential side, we've seen, a fantastic, cycle for the last few years, and we do see that stabilizing. And the office market as well has done well, and we are now positioned to put a lot more focus and capex into our office portfolio. Hospitality, as you know, that entity listed last year, and we do have an expansion plan there as well, adding, another 1,700 keys to an existing operating portfolio of 1,600 keys. So, we have always believed in the diversified business and continue to go in that fashion. I think what we're seeing today is just a blip in terms of launches not coming in to Q4, and we will see that normalize over the next financial year.
Through the year, it will get normalized, and you're not facing any issues with regards to the clearances from the authority as well, right? Because at this time last year, that was an Achilles heel for you and multiple other developers in that region.
I think the approvals environment has continued to be a little challenging compared to historical for markets like Bangalore. I think in Hyderabad and Chennai, there is a little bit more predictability. There are a lot of changes in Bangalore in terms of, the local authorities. Some of the rules are constantly changing. So from that perspective, it's less clear than maybe what we were used to in the past. But I would say, we are We are expecting things to still remain a challenge. So, we are working hard to see where we can constrict some of those timelines and, work with that. So we're not going with a rosy picture in terms of expecting things to happen sooner than they possibly can.
Talking about the picture ahead, Ms. Shankar, some concerns about whether it's going to be less rosy, especially for commercial real estate, with what's happening with IT jobs and looking at the concentration of where you are. I know you'll say GCC opportunities will replace some of those job cuts, but on balance, isn't that a headwind that you are possibly preparing for?
Yeah, I think on AI, it is a developing situation. There's a lot of conversation and, thoughts about impact, which part of the workforce it's going to impact. I think it's definitely something that's disrupting. We're keeping a close eye on it. Whether the jobs are going to shift from IT to GCC or even within GCC. That said, there are still a lot of new GCCs entering the market that are AI first and AI driven, and we're still seeing opportunities for those GCCs to expand. Even in markets like Chennai and Hyderabad, which are our newer markets compared to Bangalore for us, we're seeing pretty strong demand on ground. I think it's developing. We'll have to wait and see. Ours is a sort of longer term business that is reacting to short term news and short term discussions on this, but we will see how it pans out. If there's any one thing, we are a long-term player. We're looking at still building high-quality developments, mixed-use developments, which I think are what do well when it comes to flight to quality. So from that perspective, we are still very much geared up and positive about all three markets where we are.
Thank you so much for coming in today and answering all of our questions. We truly appreciate it. Bharat Shankar there of Brigade.
Thank you.
Amit, good afternoon and welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. Good set of numbers. I know it's that one time which has impacted the profitability in the fourth quarter, but overall, sentimentally, and if you have to look at it structurally, getting into FY27, how are you seeing the roadmap from here on? Because you are staring at global uncertainties as well on the macro front. So segments like defense, aerospace, or even for that matter, domestic auto, all of these are at the forefront of seeing supply chain issues. With the guidance that you've given for FY27, how are you seeing that resurgence in business come back in FY27?
So, hi, thanks. So basically, we see a very strong growth this year, driven by multiple factors and largely driven by a lot of the new product development and new sectors that we have targeted, plus a recovery in, the automotive sector, in the truck side, in the US, also to some extent in Europe, which we are seeing so far, and strong growth in India. If you look at our new sectors and some of the acquisitions that we have done, whether it's K-Drive, whether it's JSA, and also the new acquisition or the acquisition of stake in Fortuna that we've done, is all very complementary and synergistic with our existing business and will help us, increase our share of the wallet of the customer very easily and very quickly. So these are some of the measures that we have taken. Plus, we have made significant capex over the last 2 years, continuing into this year, which will add a very large new capacity for products that go into the data center market, into the semiconductor market, and many of these kind of markets where there is a lot of growth, plus there is a shift in supply chain from other geographies to people like us, and that's where we see a lot of opportunity. And we have secured a large amount of long-term business that will translate into revenue starting from the end, from this year itself.
Amit, Alex here. So therefore, let me ask you this. In the event that this geopolitical uncertainty gets resolved quicker than some might be anticipating, there are some very aggressive and optimistic ideas that it might get resolved this week, and I hope those people are right. But even if we're talking about a resolution in the first quarter, do you anticipate that there could be an upside to the guidance that you've given of 25% growth?
Look, I don't believe in counting your eggs till, the chickens till the eggs hatch. So, I hope that if that happens, yes, there will be some upside and, there will be, let's say, reduction in costs and therefore inflation and therefore overall market growth and sentiment will be more positive. But notwithstanding that, I think we're still planning for aggressive growth. And, our plans as far as the products that we have entered, the markets that we have entered, the acquisitions that we have made are all, aimed at helping us accelerate our growth and continue this pace of growth into the next few years.
Ask about that one-time hit and the impairment that you've taken on the the 450 crore hit that you've taken on the e-mobility business. What was the thinking and why in this quarter?
Honestly, you've seen how the whole world has been vacillating with electric mobility. In the US, there is a pullback. In Europe, there is ineffectiveness because of the technology supply chain not being in place, the value chain not being in place, and the overall infrastructure not being in place. I think that the e-mobility sector is picking up pace, but it's not growing at the same pace at which everybody expected it to take pace at. And plus, honestly, I think the Chinese value chain in this is very strong, and they are going to dominate parts of the value chain for a very long time. So we decided that in the absence of having a profitable path to profitability at the current time in the overall business, we will only focus on those sectors and markets which are profitable, and especially like the repowering business where we see a lot of traction. And that's an area where we will focus, but we're not going to focus on anything and everything.
Okay.
And honestly, sorry, go ahead.
Yeah, Amit, on this, when you're talking about focusing on the businesses which are of value, then how are you looking at the EV portfolio? Because your electric mobility investments have led to some bit of impairments in FY26 as well as Alex and you've just been talking about. So if you have to talk about Kalyani Powertrain, how will that reshape your overall product mix so that you can actually focus on your high margin e-axles as well as the software integrated systems business?
Yeah, so as of now, we are already a big supplier of powertrain components to electric mobility, both on the passenger car side as well as a little bit on the CV side globally. I don't think we are in the, right now supplying an entire solution, but we are supplying components and subsystems that go into solutions. Another area where we have a lot of traction and business on e-mobility is on the aluminum die casting side. The area where we are defocusing right now is on the system level, because on the system level in India, the commercial vehicle market, which was our original, our goal, is going to be addressed partially through our acquisition of K-Drive, where we have the ability to make e-axles and components and even the whole e-axle for LCVs when we are already doing that. And it doesn't make sense to have two offerings within the same company to do that. So what we were trying to do in this, we are now winding that down and focusing on repowering within Bharat Forge, and then the e-mobility piece on the commercial vehicles will be largely focused on through K-Drive.
Okay. Another question I have for you over here is, in terms of the defense portfolio and aerospace execution, let's talk about defense. Order book, extremely strong, I think, if I'm not mistaken, at record high levels, and if you have to exit FY26 and look at FY27. So what's that timeline when it comes to where conversions are concerned, where orders will actually get converted into revenues in FY27? Because what? Almost 11,000 odd crores is what you're sitting on. So how much conversion are you looking at?
So this year will be the ramp up and let's say start of the ATAGS order. We will start delivering that from, I would say, probably from the end of second quarter or early third quarter. So we will have at least 2 quarters of delivery of ATAGS as per the current schedule which we are working with the forces and with the MOD. On the carbine also, we should start seeing deliveries by the end of the year. So those are 2 programs that will take off. And of course, we have multiple other programs which we have won under EP, and that will also deliver in this year. So.
साथी हाथ बढ़ाना साथी रे जिंदल साथी सील साथी रे अरे सॉलिड इसकी फील है जिंदल साथी सील है दोस्त की स्टेनलेस स्टील है क्वालिटी में दम है साथी रे बिजनेस करेगा ग्रो साथी रे टाइमलेस इसका लुक है साथी रे और जिंदल साथी
जिंदल साथी सील है तो असली स्टेनलेस स्टील है।
तो जब भी आप स्टेनलेस स्टील पाइप्स एंड ट्यूब्स खरीदें, जिंदल साथी सील जरूर चेक करें।
जिंदल स्टेनलेस, इंडियाज लीडिंग प्रोड्यूसर ऑफ स्टेनलेस स्टील।
3, 2, 1, 0, ignition, lift off.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So I was really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked, what is happening to my son.
What do your parents do?
In fact, I...
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Good evening, I'm Vikram Oza. You're with me on The Big Question here on NDTV Profit, and tonight the politics of welfare is running headlong into the limits of state finances. 17 out of 28 states, plus Delhi, now run monthly cash transfer schemes. In 2019, if you look back, that number was just 4. So the median payout is around 1,500 rupees a month. But the cumulative bill is exploding. The economic surveys pegging spending on women-focused schemes alone at 1.7 lakh crore rupees this year itself. And the scale is only rising. In Tamil Nadu, the poll promises that have been made could cost nearly 88,000 crore rupees. Consider West Bengal, more than 72,000 crore rupees could go out. In some cases, these commitments alone could add up to 3 to 4% of a state's GDP, which pushes fiscal deficits beyond that 3% line. Kerala already at 3.9%. You're seeing it over there. Bengal is above 3%. And if you look at other states as well, the debt levels for them remain quite elevated. Yet, these schemes are not politically or economically irrelevant. CRISIL data that we've been poring over is showing that cash transfers now cover up to 74% of rural spending for the poorest households, helping sustain consumption, of course, improving food security, even lifting families into higher expenditure brackets. So here is the tension. On one hand, you have cash, which is cushioning millions. It's acting as a demand engine when growth is uneven. On the other hand, nearly half the states are running these schemes already in revenue deficit. They're borrowing even for paying salaries. They're raising the risk that capex, jobs, and long-term growth are making them take a hit. This is no longer a simple freebies versus welfare debate, because now the real question is, can the states afford to fund this politics of cash transfers without derailing their fiscal future? Which is why we have the big question tonight. Now that we are seeing the kind of rising debt levels in the states, we are seeing the fact that India is kind of doing much more of the welfare politics. Now the question is, this freebie culture, this ravedy culture, no matter what you call it, you could call it welfare when you're talking about economics as well, it is crucial for India's growth as well. But now can we sustain it in our kind of economy? That's the question why I want to take across to our panelists, and they're joining us on the show. Let's meet them first. Well, S.C. Garg is with us. He's a former finance secretary to the government of India, a keen observer of the Indian economy. Always good to have him. With him is Arun Kumar, a senior economist with deep expertise in public finance and macroeconomic policy. With them, we have Sanjay Kumar, an election analyst. He's a psephologist as well. And we'll be joined by a political analyst in a moment. But welcome to the big question, gentlemen. Just a quick note to say that you can jump in. Jump in anytime you want by raising your hand, whether it is to interject or to add a point. You raise your hand, I'll come to you as soon as I can. But Mr. Garg, to you first. 17 states running cash transfer schemes. It's up from the 4 that we had in 2019. You see this as an unavoidable political reality today, or are we slipping into a dangerous kind of cycle of populism that is becoming competitive?
See, the trend of distributing cash as benefit is recent, but freebies and the welfare spending is not any latest one. It has been there for quite some time. It was done in the form of education, other health, other schemes in kind, food, and this has been going on. So what you're witnessing is a transformation of the in-kind kind of schemes to cash transfer schemes. That is one. The second thing is that despite the cash schemes coming up almost in every state, there is no sort of no violation of the state's overall deficit regime. The states can and have run the fiscal deficit from, the limit is 3 and 3.5% for quite some time, and the states in the aggregate have not breached this limit for last 4 years. So states are not, these cash transfers are not resulting into states' indebtedness or states' finances being worsening.
Right.
What is happening is that this is eating into certain other kind of expenditures. You mentioned about the capital expenditure. Of course, there is a very clear trend that the states are reducing their fiscal expenditures on capital assets. By the way, my own long-held view is that states' capital expenditure is not any more productive either. Most of the states' capital expenditure is on irrigation schemes, transport subsidies, and energy subsidies.
So are you saying they should rather spend on the cash transfers rather than those, even if you're talking about irrigation?
What I'm saying is that the jury is out. The cash transfers may be a more efficient way of delivering, a less corrupt way of delivering the welfare than the in-kind kind of welfare transfers
Right.
or wasteful capital expenditure. But if they are poorly designed, if they are on top of the other schemes,
Yes.
then it will lead to sort of
Fair point.
pressures on
Fair
the
point.
fiscal side.
Fair point. Let's get the economist perspective, Mr. Arun Kumar. The economic survey, which I was just talking about, flagging those risks, but on the ground, these schemes are covering up to 3/4 of rural spending for the poorest in the country. So then, are we overstating the fiscal risks involved over here, like Mr. Garg is pointing out, or are we understating the economic cushion that they actually provide? Where do you stand?
There are 2-3 things that we need to flag. First is that where the market fails, state should intervene. So, for instance, education and health are cases of merit want, where the state needs to intervene, especially where the poor people's education and health is concerned. Otherwise, you are in a suboptimal position. So drinking water, and other such things, electricity, etc. There, you want the standard of living of the poor to be better. So those are sort of legitimate things that, are required. Now, if as a result of giving cash transfers, you cut back on education, health, drinking water and such like things, then that's actually going to be detrimental. And what happens is that when the deficit begins to rise, precisely that's where the state governments and the central government, they cut back expenditures. Second point is that employment generation is crucial, because if you have enough employment generation, then people will have enough incomes and they can spend it as per their requirements. And what we've seen is that the unemployment situation has been rather bad. So it's not directly unemployment, but underemployment and disguised unemployment that has been rather bad. And that's why the income levels of the poor people are very low. The third point is that actually now people don't believe in the promises of the political parties. And that's why they want immediate, something.
Right.
And that's we have been noticing that since 2019 election, when I tried to help some parties with their election manifesto, they said, no, we have to give something immediately because people don't believe in the long run. They want something now, and therefore the immediate cash transfer or bus, rides or, laptops or cycles or these things, they're very attractive, So therefore there's a competition amongst parties to do it. And you can see that if somebody promises 1,500, other comes in and promises 2,000 or 3,000, or, similarly for, the agriculture, sector, there are various kinds of subsidies that are going up because you want to attract people to vote for you. And if one party is doing it, the other party is forced to do it. Now, what is also happening is that in spite of this competition, for instance, we see in Bengal, the ruling party is lost. They had a lot of giveaways, but the opposition also promised many more giveaways. And that didn't work for the ruling party, So it doesn't always work. But in case of Bihar, where money was distributed to 1.5 crore women, that seemed to have worked for Bihar. So sometimes it works, sometimes it doesn't work.
Yes.
So there are other factors also that are important.
No,
but
absolutely.
The faith in politicians is gone. So it is cash in hand or something in hand immediately. That's what people are looking for.
Let's take that across to our political analyst. Aditya Shesh is now with us. Aditya, cash transfer politics. Now, like you heard Mr. Arun Kumar point out, this is winning elections across parties and states. What has fundamentally changed in voter behavior that makes this model so electorally powerful, according to you?
Well, if shareholders can be happy with dividend in their hands, treat this as a sort of dividend. And it makes sense because, you're getting money in your hand. But the problem, Vikram, is that over a period of time, the USP will be lost and everybody will look the same. But I must also tell you that Bengal is a standard case where the problems were genuine, the atrocities were real, the economic development was very poor, and that is why the cash dole-out did not make any sense. And then you had a change in the government. So where it is accompanied by good governance, by good law and order, good performance, these cash dole-outs act as the flipping point for somebody to come and vote for you. And more important, Vikram, it helps in increasing the voter turnout. So therefore, from a politician's perspective, after having worked for 4 years, 11 months and 29 days, the 30th day seems to be fine. Yes. Does it harm the economics of the state? It does. Does it mean that the states are in debt? They are in debt. But somewhere we got to increase the GDP such that this number looks smaller.
And Mr. Sanjay Kumar, just taking away from what you're hearing from Aditya, this model is working across ideologies. So why are voters rewarding cash transfer politics so decisively is also another question. Is this about welfare or trust in direct delivery? Is that what is happening according to you?
No, first, it's not that voters are rewarding the ruling party all the time. If you look at the 5 states which went to poll recently, 3 state governments have lost. And all the 3 states, and I'm referring to Tamil Nadu government, the Kerala, and Trinamool Congress losing elections in West Bengal. All the 3 governments were giving out, cash transfers and various other schemes, but still they actually were swept away from the power. So it's not that it works every time. It only works when there is some kind of a satisfaction with the other work done by the government, the incumbent government. If people are unhappy about that work, I don't think such schemes are going to help the party to retain power.
Fair point. Mr. Garg, since you talked about the fiscal deficit mark, breaching that 3% fiscal deficit mark, are states like Kerala at 3.9% or Bengal, which has gone above 3%, and Tamil Nadu is inching past. So I'm just asking you, you said it doesn't alter the fiscal deficit picture too drastically, but at what point does it become a macro stability risk rather than just a state level concern? Mr. Garg.
Exceed fiscal deficit, right?
Yes.
So there it is mandated 3 or 3.5% as this government of India decides, and states have no way to exceed it. And therefore, whatever they spend on, the fiscal deficits will not be exceeded. So that concern is not genuine in my judgment.
Okay.
The central government has liberty to increase its fiscal deficit.
Right.
It's running much higher fiscal deficit for last many years. Even this year, it will be more than 4.5%. The states don't have that luxury. What they do is the transformation of the